You saw this deterioration, and then you saw on the same time, and they didn't specify why, but you saw gasoline prices go higher. And what do we have today in the oil market? Higher oil prices. The rest of the timeline for the rest of the year, are we going to see that trickle down to higher gasoline prices, which is very difficult ahead of a November election?
All I can say is that it's such a muddle right now. And everybody's coming on. They can parse the news. They can talk out of this way. They can talk out of that way. Everyone says something different. And the bottom line is people just don't know. And yes, there is some exhaustion with everything. I know you're pushing back. You're saying they've got record highs.
Brammo, I didn't say a thing. Don't worry.
All I can say is you just look at this, and there's nothing to really say conclusively.
It's an Oprah Winfrey market. You get a car, you get a car, you get a car, something for everyone.
Saw that in payrolls last Friday. Brammo, I'm with you. It can get boring. It's a little dull. It can be frustrating.
It's not that it's boring. It's like the French word ennui. It's like boring into you, because it's sort of this question of, which is it? It's actually a precipice. It's not just sit back and don't pay attention. It's you need to pay attention because this is a momentous pivot point, but we just don't know in which direction.
The commodity market's a similar story in some ways. I mean, I can tell you one story and look at gold, look at copper, look at crude, can also point to iron ore. By the way, I thought you did a brilliant job of what's happening with iron ore and copper. Jeff Curry of Goldman used to talk about this, the difference between OPEX commodities and CAPEX commodities. There's a property story in iron ore. There's a copper story that tells a different one about what's happening there in terms of growth and where you're seeing that growth.
And the divergence. In the divergence, you have to go to the place where there's huge demand, and we haven't seen that demand at times. And that's China. And it's all about the changing economies and what we use these metals for.
This is Operation Get Lisa to the weekend through the next 55 minutes or so bear with us. Over the next 55 minutes, here's the lineup for you. CFRA Sam Stovall, as a week of hot inflation prints weighs on expectations for a rate cut. Nationwide's Kathy Bostjancic on a strong US labor market ahead of next week's Fed meeting. And Mark Gurman with Apple making a purchase in AI as it looks to catch up to rivals Alphabet and Microsoft. We begin with our top story, a string of hotter-than-expected inflation prints weighing on US stocks and bonds as we head towards a Fed decision next week. Sam Stovall of CFRA writing this: with no rate cuts expected, the focus will be squarely on dot plots and potential shifts. The greater risk is that one or two of the lower dots are boosted, which would lift the median and suggest fewer rate cuts. Sam joins us now for more. So Sam, just a couple. That's all it takes to go from 3 to 2 on that median dot next week. Is that your base case, and do you think this equity market would be comfortable with that?
Morning, Jonathan. Yes, that is the base case. We've been saying for quite some time that the Fed will be slower to lower interest rates, and our expectation had been that June would be the most likely starting point for rate cuts. Interestingly, that is 11 months after the last hike in July, and that also historically is the time spread between the last rate hike, first rate cut, going back over the last 30 some odd years. But I think that 75 basis points for all of 2024, with the first cut occurring either in June, but now possibly in July, is what investors are factoring into their expectations.
Sam, how much of a mood killer will it be if next week Jay Powell gets up on the podium and says, we're concerned about stocks getting ahead of themselves?
Well, Lisa, I think that would sort of sound a little bit like irrational exuberance of 1996. So there could be some pressure put on equity prices. I think right now prices or the market is priced to perfection, with the PE on the S&P 500 trading at a 31% premium to its average forward 12-month PE over the last 20 years. So I think that, in a sense, some investors are looking for a catalyst for a minor correction to sort of reset the dials, and that would do it.
I love this, that it's priced to perfection, but things are almost perfect. I mean, Sam, everyone we've talked to says, we could be poised for a bit of a retrenchment, 5 to 6% pullback, and that's a buying opportunity. Do you agree that we're priced to perfection, but things still look pretty good, so it's pretty perfect if things go off and it's priced better? We kind of like it?
Yes, I would say that, but at the same time, it sort of unnerves me that a lot of people are saying that, and the market typically does not do what most people anticipate. Historically, election years have always been positive when they have been front-ended by a January gain in the S&P 500 going back to World War II. And I think that because we have seen so many all-time highs, that too sort of indicates that maybe we are getting ahead of ourselves. Also, let's remember that the CNN Fear Greed poll last week was reading excessive greed, and the AAII membership survey, the bullish reading was unusually high, using their terms.
Sam, I feel you. Everything just feels a little bit stale. The consensus, I'm just sitting here wondering, and we catch up with a lot of people every day, every single week, and hardly anyone has shifted their views directionally. Sam, that's what's intriguing to me. They were bullish and now they're more bullish. And if they're expecting rate cuts, they still are, but they've just sort of pushed them back to June, and maybe the magnitude hasn't really shifted much. Sam, why do you think that is? Why haven't we seen a change of views directionally over the last few months when the economic data really has pushed back against expectations, the base case of the end of last year?
I agree, and I think it's because of the old saying that the trend is your friend. And right now, the trend continues to work higher, despite those, like myself, who think that we are due for some sort of a digestion of gains. Let's face it, every bear market since World War II, whenever we recovered everything that was lost in that bear, the market advanced another 5% or so, but then fell into a decline, averaging 8%, but no more than 14%. So we're waiting for that resetting of the dials, but because the trend remains our friend, that's why I and others have not changed their directional forecast.
Sam, let's talk about what to do. Do you stick with the winners, or do you position elsewhere? If you are worried, uncomfortable with where things are right now, where do you want to be?
The right answer to most financial questions is that depends, meaning what is your time horizon? If it's very short term, then I would tend to say that we've seen a lot of rotation going into the underappreciated areas, such as materials, industrials, healthcare. But history basically tells us following an up year, you want to let your winners ride. 2 out of every 3 times over the last 30 years, the sectors that did the best in the prior up year continued in the subsequent up year. And right now, that would imply that communication services, consumer discretionary, tech, and financials are those that you still want to favor for the year ahead.
I want to pick up on consumer discretionary, Sam, especially because retail sales stood out yesterday as the one weak spot that's giving some people comfort that the Fed can cut rates and that the U.S. economy isn't as strong as it seems. I don't want to say comfort, but that this idea that we're not overheating might give people some sense that they can settle into their opinions. I'm curious, does that give you pause about consumer discretionary, about the strength of the consumer?
The consumer has been questioned, I think, over the last half year at least, looking at debt levels, looking at consumer confidence levels, but we continue to see very strong employment numbers, unemployment rates, et cetera. And the consumers, I guess the old saying continues that consumers stop spending only when the banks stop lending. So we're going to need to see a curtailment of lending practices by the banks really to slow down the consumer. Yes, I think that the cap-weighted 500 consumer discretionary sector is losing momentum, but that's primarily because of Tesla. When you look at the equal weight, things are holding up relatively well. So I would tend to say that the jury is out as to the near term, but still positive for the longer term.
Key point, huge Tesla distortion in the discretionary part of the consumer. Hey, Sam, great to catch up. Sam Stovall there of CFRA. Think about where we were a year ago. It wasn't about whether we'd get a recession. It was about how deep it would be, because we were about to get this big contraction in lending off the back of the banking stress of last spring. Did not happen.
And we see credit card outstandings continue to increase. We see all of the, how many people have come on to talk about either direct lending, consumer lending. We want to get in because it's a great time to lend, and there are people who are asking for it. It's still there.
I remember the conversation you had with Mary Daly of the San Francisco Fed, and you were talking about, had a conversation about when the data was in conflict, it meant we were at turning points. Data's still in conflict. Have we turned anywhere? I'm looking at jobless claims yesterday that say rock solid, retail sales that say there's some weakness. We've seen that conflict now for a number of months.
This is why I've been sort of focusing on the exhaustion feature, because it's been a muddle for a long time. Everyone's been waiting for a turning point that hasn't happened. So you just sort of embrace the fact that this is the reality now, that there just are different cycles that are kind of in conflict with one another and are moving beyond one another. it's a very difficult moment to really have conviction.
Do you enjoy the weeks where there's no Fed speak, the quiet period that we're in right now?
Well, I think that a lot of people, the funny thing is, in quiet periods, people say, what are they going to say?
I know.
And then we spend the whole time imagining what they might say. And then we get the Fed speak.
We don't want it.
You know, so I mean, either way, pick your battle.
You get the Fed speak back next week, for those of you interested. Kicks off with Chairman Powell in the news conference following that decision Wednesday afternoon. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackes. Hey, Yahara.
Hi, John. Hamas proposing what it's calling a comprehensive ceasefire deal as it tries to make progress on talks with Israel. Reuters reporting the plan would see the freeing of hostages, including Israeli women, children, the elderly, and those who are ill. This in exchange for the release of up to 1,000 Palestinian prisoners. Israeli Prime Minister Benjamin Netanyahu says the militant group is still making unrealistic demands. The country's war cabinet is expected to discuss the proposal today. Shares of Adobe falling in the pre-market after posting a weak sales outlook. The guidance is fueling concerns new AI-focused startups are threatening its market share. The company has been integrating its proprietary AI model Firefly into its top products like Photoshop and Illustrator. Still, a recent demonstration by OpenAI of its video generation model Sora is fueling concerns about competition. Bitcoin is retreating from its latest record high, this amid an intensifying debate about whether the bull run in cryptocurrencies has reached a bubble. It reached an all-time high of almost $74,000 earlier this week. Bitcoin and a gauge of the top 100 tokens, comprising the likes of Ether, BNB, and Solana, are up about 60% so far this year. That's your Bloomberg Brief. John?
Yahara, thank you. How many times we heard the bubble call on Bitcoin? 20? 30K, 40K, 50K, 60, 70?
Right, exactly.
The whole way up.
Yeah, and people are still doing it. Whether people buy it, another story. It's getting institutionalized at this point.
I think it's a bubble when you have dog with hat meme coin ad on the Sphere. Isn't that peak
We were doing
bubble?
that, though, a few years
Exactly.
ago.
This has been ongoing.
It keeps going up.
It's a cute dog.
Up next on this program, supply concerns driving up oil.
OPEC is still projecting that we're likely to see 1.5% to 2% demand growth year over year, with a decent economy here domestically and some improvement we're starting to see emerging globally. To me, that is the ingredient for why oil prices are being propped up and could even continue to grind higher.
That's up next. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This has been quite a week. Let's start with the stock market. So equity futures right now on the S&P 500 are positive by, let's call it 0.06%. No real price action yesterday. But I want to start on Monday morning. Let's wake up Monday morning. Not together, that would be weird. I'm at work, you're doing whatever you're doing. And I'm saying to you, this is the inflation data we're going to get for the week ahead. Tuesday, CPI is going to come in hot. I'm going to say Thursday, PPI is going to come in hot. Then I'm going to say to you, guess what the stock market does? I don't think you would have guessed that on Tuesday the S&P 500 would be up by more than 1%. I don't think you would have guessed that on Thursday we'd only be down 1/3 of 1% on the S&P after PPI essentially reinforced what we saw in CPI. And I think that's what's difficult about not just this week, but I would say that's what's difficult about this year. You come into this year and you've got a market looking for 6 to 7 rate cuts. Federal Reserve, they're implying 3 based on the median dot. And again, we started the year together, and I said to you, what would happen is we close that gap from 6 or 7 down towards the Fed, 3, maybe even 2 at this point. What would stock markets do? I don't think there's many people who would have lined up on this program, turned around and told us all, I think record high after record high on the S&P 500, even if we reprice in that manner.
And a lot of people weren't expecting some of the underlying strength that we saw also, though, in U.S. economic growth and earnings, right? So then people point to that. We've come to this sort of good news is good news and bad news is good news moment, which I think is interesting, given the fact that you have the Fed as a relief valve if there's weakness, and on the flip side, you have strength as bolstering earnings on the other side. To me, this is the sort of wedge that people are in. The only thing that could really upend then, that to me, is true weakness with inflation.
So you've had CPI, we've had PPI. Last read on inflation, a little bit later this morning, if you want to call it that. We'll get inflation expectations in the University of Michigan Sentiment Survey in about 1 hour and 40 minutes. So look out for that as well. All of that going into the Federal Reserve. If you want a quick sneak peek of what's happening in the bond market, I'll give you the yields across the curve right now. The 2-year yield just about unchanged at 470. The 10-year yield down about a basis point to 428. And in the commodity market, we'll talk about that in just a moment. Crude, WTI, $80 at about 59 cents. We are negative by 0.8%. Under surveillance this morning, supply concerns driving up oil.
We know that OPEC Plus has been somewhat stringent with regard to their supply, and we've not seen the kind of diminution in demand we otherwise might have expected coming into this year. As a consequence of that, OPEC is still projecting that we're likely to see 1.5 to 2% demand growth year over year. So net, with a decent economy here domestically and some improvement we're starting to see emerging globally, to me, that is the ingredient for why oil prices are being propped up and could even continue to grind higher.
Here's the latest this morning. Oil prices climbing, with the IEA forecasting higher demand and a market deficit through all of 2024. Copper also rallying to its highest level in 11 months on bets global manufacturing and construction could be picking up. Will Kennedy of Bloomberg News joins us now for more. Will, it feels like this commodity market almost out of nowhere has just woken up. Well, what's woken up this commodity market in the last few weeks?
I think it's the strength of demand, which is the strength in most parts of the global economy, I think is feeding through into final demand. If we take both oil and copper one at a time, there is a supply story as well. On oil, the supply story, of course, is OPEC Plus, which have extended their cuts for 3 months. And the IEA is saying now that if OPEC continues those cuts all the way through this year, not necessarily a given, but if they do, we'll see a deficit all year, which will, of course, put pressure on inventories and force prices higher. Demand for final products looks strong. Gasoline demand in different parts of the world looks strong. People are out there and they're driving. And that is changing the narrative to something more bullish than certainly we saw at the beginning of the year. Copper, there are supply problems. There are a couple of mines, especially the one in Panama, which is not producing. But again, there is also a strong demand story. Copper is critical to big parts of the global economy, as you know, and especially the electrification of everything, grids and that kind of thing. So demand is strong.
What has changed, Will? This has been the story, though, for several months. Why are people suddenly waking up to this? Is it really because the energy agencies are coming out and talking about it? Is it the OPEC Plus cuts, or is it something else?
I think they are climbing a wall of doubt. They're climbing a wall of doubt, especially in China. People are and remain concerned about final demand there. But I think as the data comes in, they show that in other parts of the world, demand is strong and more robust than they was expecting. They see that on the whole, OPEC is complying with the cuts that it promised. I mean, in Russia, for example, made a tweak to the way it will interact with OPEC Plus that means that it beefed up its pledges somewhat a couple of weeks ago. And you put all that together and people slowly are coming around to the idea that this market may be more bullish than they thought at the start of the year, when certainly people were very gloomy about the prospects for oil in 2024.
Well, this potentially sets up a showdown then with Washington and Riyadh if prices get too hot. At what point do you think the Saudis would come in and add more supply?
I think they'd like to add more supply. I don't think they necessarily have a price in mind, Anne-Marie. I don't think it's ideal for them to keep this level of production of 9 million barrels away all the way through the year. The problem that they may have is the market may be expecting that, and if they do try and introduce more barrels, the market may not soak them up. I think they'll be very, very closely looking at the health of the economy, looking at demand, and will add barrels when they can. I think the point about politics is an important one. Clearly, if you look at copper and oil together, and if this rally continues, then commodities which had gone away as an inflation story start to come back.
Well, we already saw this. We're already seeing it. We're already seeing this hit consumer sentiment. Maybe we'll see more of that today when we get fresh data. So can you just take me into the geopolitics then of this? Because it's an election year. So it's going to be a pretty big deal whether or not Riyadh puts the pedal to the metal and puts some more supply into the market, or they decide to hold back.
Yeah, I think it will. I mean, if prices go much higher from here, Anne-Marie, I mean, clearly the pressure will be for the Saudis to put more oil into the market, but the Saudis may well want to do that. Yes, they're benefiting from these prices at 85, and of course, with their official selling prices, they get more than that into the 90s. But they have cut production a long way back to 9 million barrels a day, and that's curtailing their income. So I think ultimately, if the market continues to be strong, they will want over the second half of the year probably to put some more oil back into the market, but they will be very cautious about doing that. We've seen all along that the Saudis, that Prince Abdulaziz is cautious. He wants to be preemptive in his words, and I suspect we'll see that cautious attitude continue. So if prices, it may get testy in the months ahead, Anne-Marie, as you say.
Well, just before you go, we're all seduced by the prospect of telling a broader story, putting together a bunch of issues and saying this is the big coherent theme right now. Commodity prices are up, it's inflationary. Do you see it from the same way, in the same way, from the same perspective?
I think time will tell. There are other parts of the complex that don't quite fit that big story. If we look at iron ore, the other big headline that we had this morning was iron ore going back 100, which I think speaks to some persistent weakness in parts of the Chinese economy, which sort of takes away from that narrative a little bit. But I think that clearly if the economy keeps to do very well, supply is constrained for both copper and oil. It really, really could change this idea that commodities would be range-bound for this year, but I'm not sure we're quite there yet.
Big changes in the last week. Just starting to feel this commodity market wake up. Will, thank you, sir. Will Kennedy there of Bloomberg on a range of issues. You like the politics of this, don't you? You think maybe the Saudis are going to squeeze this one?
Well, this is going to get very political. Remember, the former president, who's now the nominee,
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
The shape of things for you. 2-year yield so far this week higher every single day this week. We are back in the 470s. Higher Monday, Tuesday, Wednesday, Thursday, Friday. Yields up a single basis point to 470.85. That's about to change. Mike McKay has some data. Morning, Mike.
I'm not sure it'll change a whole lot with Empire because it's not a heavily traded number, but it is a negative number this time, negative 20.9 down from negative 2.4. This one's been very volatile lately. It's sort of the New York area manufacturing index, and it doesn't represent the whole country, and it has been one of the weakest that we have seen around the country. Prices paid is probably what people want to see. And in that case, it does go down. Prices paid fall from 33.0 in February to 28.7. So perhaps that's a good sign. We'll see if it carries over into some of the other regional indexes. Import prices come in up 0.3. That's significantly down from the 0.8 a month ago. Ex-petroleum up only 0.2, down from 0.6. So it does look like we're seeing an oil impact, and you guys were talking about that earlier on the show, the rise in petroleum prices. On a year-over-year basis, import prices are down 0.8%. Export prices up 0.8%. So the terms of trade a little bit okay, improving for the United States.
Well, improving, although still coming in above expectations, just sort of relative to where people had sort of put their thresholds. Right now we're looking, for example, at the import prices, taking out gas, taking out all oil products, coming in up 0.2% versus the expectation of it falling 0.2%. Does this create a problem for the Fed that all of the data points have been pointing, not necessarily that things are heating up to a dramatic degree, but hotter than people expected, not cooling as quickly as many people were hoping?
I suspect it is less of a problem for the Fed than for markets, because the Fed doesn't have to change its mind as often as the markets do. And the markets are now getting worried about inflation, and the Fed's been talking about the possibility that this last mile would be difficult and bumpy for quite some time. And they can go into the meeting next week. They're probably already at a point now where they've made their choices for what they want to do, but they can go into the meeting saying, all right, we can incorporate all this late data into what we're thinking. We got the latest Bloomberg survey of economists in terms of what they think the Fed is going to do. And right now, economists say 3 rate cuts is still on the table starting in June. And then by a 73 to, I think, 20% margin or something like that, they said we have not reached a soft landing yet.
471 on a 2-year right now. That's caught my eye, Lisa. Yields climbing every single day this week.
People are really looking at the hotter than expected inflation reads. Even if they're going in the right direction, they're still coming in above expectations. And that, I think, is causing pause. Are people's baseline assumptions of ongoing disinflation, even understanding the bumps, kind of getting a bit of the front and center?
10 o'clock this morning, we get the Michigan numbers, sentiment numbers.
Yep.
That would be an interesting read on people's views of inflation and how things are going overall, because is this filtering out, and I know this is Anne Marie's area, is this filtering out into the voting public? What's the angst that we're seeing on Wall Street?
I'm pleased you brought up Mitch, because you remember when that survey came out and it actually shifted the Federal Reserve to make a move earlier than it was going to, certainly earlier than they'd communicated. I wonder, Mike, what's the focal point now? Because it feels like the goalposts have shifted a lot at the Federal Reserve, and you might disagree with that, but I'm going to point some out. Supercore was the big focal point. Doesn't feel like Supercore's the big focal point anymore. Mitch was enough to move the dial. Doesn't feel like it's enough to move the dial anymore. What is the big issue for them right now? What are they focused on?
Well, they're totally focused on inflation at this point. They're keeping a sort of an eye on unemployment. If it were to shoot up, that would bother them. But at this point, it's all the inflation data is what they're looking at, and they're looking at what is it that is not going down? What is causing the problem going forward? But I remember Alan Greenspan years, you're too young for that, where we all talked about his bathtub indicators. Remember, he used to sit in the bathtub every morning and read through all kinds of obscure things, and he would make a comment and say, scrap steel looks interesting, and then all of a sudden, scrap steel indicator is the indicator that the entire world is following.
If it's all about inflation, then we should expect a dot move?
I don't know if you expect a dot move, because it doesn't have to come now. There are some people who think they might not get there yet, but you could do that in June when they get to the next dot thing if inflation continues to go that way. There's a signal that gets sent through that, even if it's not the one the Fed wants to send, that they may not want to make right now.
You reminded me of Goodhart's law. Do you remember that?
Yeah.
When a measure becomes a target?
Yep.
Yeah, that's what it feels like with some of these inflation indicators right now. Mike's good to see you. Mike McKee. Kathy Bosjancic joins us now of Nationwide Mutual Insurance for a little bit more on this. Kathy, great to catch up with you. You've got the data in front of you. What we've heard so far this week, has it moved your base case in the last few months in any way, shape or form?
Yeah, good morning, John. Happy to be with you. The CPI data that we saw for February was confirmation that inflation isn't decelerating as quickly as we thought. And we have pushed back the timing of the first rate cut. So we were in the May camp. We've said now that it's, they're not going to come. We still think that's on the table, but, clearly, just as you have been discussing and Lisa mentioned, inflation has been more stubborn than expected. And the Fed is not in a reason, there's no reason for them to be in a hurry to cut interest rates. The labor market's still quite strong. Consumers doing well. We saw it with the retail sales data yesterday. So I think they take their time and make sure, they're fully confident that inflation is going back to 2%.
There's a distinction between continual disinflation with some bumps and stubborn, sticky inflation that just isn't going down further. How do you know which we're seeing right now? Because a lot of people are saying it's just bumps bound down to the same destination, and other people are saying, hold on, this is something else. We saw a troughing out in the disinflation trend a couple of months ago, and things have really shifted.
Yeah, it's difficult, but we look at all the numbers right from the bottom up and make projections as to where they're going, and there's reason, I think, to still be optimistic. It's cautiously optimistic, but there's optimism in our view that we're still in this long-term, disinflationary channel, but there is bumpiness. And it seems, the first of the months of the year, we know there's some seasonal adjustment factor issues. They do their best, the Bureau of Labor Statistics, to smooth out these, first of the year, beginning of the year increases. But it's difficult. But we think as we go forward, rental inflation is slowing in real time. That should be reflected in the housing numbers. And we even think in the super core, there's some cooling. One category that Chairman Powell has highlighted is that core goods number. That's been a really great deflationary reading, but that's where it stalled a little bit. And why that's important, that could be the shock absorber or the offset for higher core service, prices if we get some surprise.
If we push forward to next week and we try to understand the balance of risks and how the Fed wants to communicate some of their policy, I wonder if Ian Lingen is right, where he was saying, really the wild card here is how much they really acknowledge the fact that easier financial conditions are keeping this party going, are kind of keeping the inflation running a bit hotter. Do you expect them to address that? Everyone else is talking about it.
I think it'll come up in the Q&A. I would assume, Mike McKee or somebody will raise this. That is really key because as they've tried to keep policy very restrictive, and you see it with bank lending, and you see for small businesses, and even for the consumer if you have variable rates. But if you're locked into a mortgage rate that's around 3%, you're not really feeling the pain very much economically. And companies turned out their debt, and then they're coming to market now and refinancing. So, the fact that financial conditions are easing, that is a problem for the Fed, and maybe it just means they keep rates higher for longer here.
What about shelter costs? Because the Treasury Secretary put a big emphasis on that in an interview this week, talking about, she says, once those shelter costs come down, biggest part of inflation, then almost ready to declare victory. Not her words, but that's how I read it. What do you make of that?
Well, there's a lot of truth to that. I mean, rental or housing costs, constitute a large share of overall inflation, and particularly of core inflation. But it's been very slow. It's been very gradual, and we're still elevated on a year-over-year rate. But I think it is coming. It's just that we have to be patient and gradual. But also those non-housing service costs have been a bit sticky. Airfares have jumped up the last 2 months because demand is outstripping supply. So those are the things that are still a problem.
Yeah.
And the service side is still quite strong.
Airfares might go up again this summer. Bramo's very focused on that, Kathy. Kathy, I want to talk about the theme of the morning. I know it might not be a base case, but in the last 24 hours, just looking at the economic data, retail sales weak, PPI hot, let's throw in CPI for good measure as well. There is a stagflationary sense that I think needs to be addressed. Kathy, we heard this from Ian Lingen of BMO a little bit earlier this morning, and what we asked Ian around the table was what this Federal Reserve would do if the dual mandate went into conflict. Kathy, how do you think about that, just as a thought exercise, how they would handle that, how they'd confront it? What would they do?
I mean, these are good questions because we are sort of seeing this. We're seeing economic growth moderating. Yes, it's been resilient, but if you look at the underlying, dynamics, there is some slowing, and that's what the Federal Reserve wants. At the same time, if inflation lingers higher, they've got a little bit of a stagflation-light environment. They're going to focus, I think, securely on inflation for now, and there's no indication they can't back away from the 2% target. That's probably something that's many years in the coming, if it comes at all. So I think they stay with inflation and they risk a little bit of a hard landing if it happens.
Kathy, it's good to hear from you as always. Kathy Bolshansky there of Nationwide going into the Federal Reserve. Said this a few times this morning, three-part story. So we'll get the statement from the Fed, you get the news conference from Chairman Powell, you get the outlook as well, the summary of economic projections. And if you speak to people on Wall Street right now, if there is a risk factor, if there's something to stay awake for, it's the prospect of getting 2 cuts on that median dot instead of 3. Lisa, that's where it's at for next week based on the economic data that we've had so far this week and so far this year.
Yeah, it's going to all be about the dots. So get out your dot plots and everyone can get really excited to see whether they shift it from 3 to 2. And then when they don't, you can say, why did we spend so much time on it? Look, I think that people are all looking for tea leaves to understand where we're at. And I think next week's going to be actually an amazing week because not only do we get the Fed meeting, we get the Bank of Japan meeting, and we get that NVIDIA conference. It's actually wonderful because it's sort of really questioning the broader technological shifts. How much does that sort of influence where we're at? And then what is the response? What is the balance of risks for some of these central banks?
Just making sure you're not being sarcastic. You are genuinely excited about next week.
I am.
Just to confirm.
No,
Okay.
I look, it's
Because Mike McKee's got to sit in the news conference.
Okay, look, I think it's going to be fascinating. I think that you're lucky to do that. I think that my issue here is that everyone's kind of exhausted. I keep going back to this with the muddle. It's been a long time muddle.
It has been a muddle.
Very hard. It's sort of, you said this perfectly. Everyone hasn't shifted their views. They've kind of just stuck with them, but not mediated them.
This might shift some views on a much more serious note. This headline just crossing the Bloomberg terminal. AMH, the Israeli Prime Minister, approving operation plans for Rafah. Your response to this one?
My response is that the president pretty much outlined this would be a red line if Benjamin Netanyahu went into Rafah. I'm looking at the statement now, Jonathan. The IDF is praying for the evacuation of the civilian population. Remember, when the Israelis went into Gaza, they told civilians to go south, to Rafah. Now they're trying to bring those civilians back to the north, and what their words are, to defeat Hamas and go into that final place of Rafah.
Really got to frame the backdrop for this as well. Stateside down in Washington, just politically speaking. That headline crosses a day after we heard some really, really strong words from the Senate Majority Leader. How big could that moment be? Now, just to reiterate what this headline actually says, this is about the approval of operation plans for Rafah. We don't know what those plans are. That does not necessarily mean that they're about to go in there imminently, but it looks like another step towards something that would put them on a collision course with this administration.
Absolutely, and operation plans means first, what I'm reading is that they have to get the civilians out of harm's way. But all you see now is, remember we had this discussion, this debate, is this for optics or is it real? When you're talking about how big that gap is from Benjamin Netanyahu and President Biden, that gap looks more real today.
Well, this is about more than optics, though, also. And I will say, in Israel, the IDF, Israeli Defense Forces, are preparing for the evacuation of the civilian population. That's according to the statement. So this is not exactly all in the sort of hypothetical. At a certain point, you wonder how much Israel is going it alone, and sort of what the thresholds will be for the U.S. to truly withdraw some of the money and the aid.
We also don't have all the details, but Reuters was talking about Hamas putting in their own ceasefire proposal to mediators. That happened this morning, and now Benjamin Netanyahu wants to move in on Rafah. Does that mean that there's not going to be a ceasefire and those hostages are going to remain in Gaza? A lot of questions right now in terms of what's the end game here.
That headline just crossed in moments ago, just to reiterate it. If you are just joining us, the Israeli Prime Minister, Benjamin Netanyahu, approving operation plans for Rafah. Let's give you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. A legal setback for former President Donald Trump, a federal judge in Florida denying his bid to dismiss charges that he mishandled classified documents at Mar-a-Lago. Trump's lawyers argued the charges from special counsel Jack Smith were too vague. A U.S. district judge and Trump appointee denied the former president's motion without prejudice, meaning the issue could be raised again later. And as you were talking about, Senate Majority Leader Chuck Schumer calling for new elections in Israel, saying current Prime Minister Benjamin Netanyahu has, quote, lost his way. Schumer saying Netanyahu made a, quote, grave mistake rejecting a two-state solution, and a single state controlled by Israel guarantees certain war forever. Republicans criticizing Schumer's comments, Senate Minority Leader Mitch McConnell calling it hypocritical for an American to call for the removal of a democratically elected leader. And Goldman Sachs CEO David Solomon called 2023 a, quote, year of execution for the bank and said he's optimistic for what's ahead in 2024 as the bank stands to benefit from a rebound in capital markets. In a letter to shareholders, Solomon weighing in on the economy, saying inflation may prove to be stickier than initially expected and that economic conditions have gotten tougher, particularly for low-income groups. That's your Bloomberg Brief. John?
Yahara, thank you. Coming up next on the program, Apple looking for a late invite to the AI party.
Look, we believe it's a 1995 moment. This AI revolution, this party, it's getting the popcorn out. It's 10 p.m. in a party that goes till 4:30 a.m.
And I've got some issues with this. I'm not sure who has popcorn at a party that starts at 10 and goes to 4. Is that pre-gaming now? Popcorn? Is that what it is?
We need you, Casa Azul popcorn.
Casa Azul popcorn. High-end stuff. Okay. That's not next on this program. We'll catch up with the brilliant Mark Gurman on Apple of Bloomberg in just a moment.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on their phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Live from New York City, stocks just about unchanged on the S&P 500. The more interesting part of this week is that stocks are still positive on the week, even with a real repricing in the bond market. We have a 10-year through 430. We have a 2-year, Lisa, back through 470.
It is, though, what's leading, and it's the winners keep winning. And I think that that is basically the conclusion from this week, is that basically heads we win, tails you lose really is the magnificent 6, 5, 4, 3, 2, 1.
Sure.
But basically the ones who have continued to eke out gains. And it looks like if there aren't as many rate cuts, those will continue to deliver as well.
Even as yields keep climbing. Under surveillance this morning, Apple looking for a late invite to the AI party.
Look, we believe it's a 1995 moment. This AI revolution, this party, it's getting the popcorn out. It's 10 p.m. in a party that goes till 4:30 a.m. This is now starting for the software sector, that AI momentum. This tech bull market continues to, I believe, go higher because of numbers, but it's going to be software-led.
Here's the latest this morning. Apple buying artificial intelligence startup Darwin AI as the iPhone maker looks to gain ground on rivals Alphabet and Microsoft. CEO Tim Cook promising Apple will, quote, break new ground in AI this year. Bloomberg's Mark Gurman joins us now for more. So, Mark, they've had to pay for this invite. Talk to me about the kind of numbers involved in a deal like this and what this brings into the Apple company.
Yeah, Jonathan, thank you so much for having me this morning. Yeah, you know, Apple has made dozens, if not more, acquisitions related to artificial intelligence over the last decade. Let's not forget that Apple was actually first to this AI, this modern AI voice control market with Siri in 2011. Back then, it felt like Apple was 4 years ahead. Today, it feels like Apple's 4 years behind. In terms of this deal, this is another one of those small AI acquisitions. This is of a company called Darwin AI, and a lot of their technology is actually based in very high-tech, highly advanced research out of the University of Waterloo and some of their top machine learning and AI specialists. So a lot of this deal was about bringing those people in, lots of people with AI-related doctorates, PhDs into Apple and making them pretty senior in the artificial intelligence organization. Now, this deal was probably in the low tens of millions of dollars range, but that's not so important. What's important here is both the technology and the people they're bringing in. And so there's a lot of cool stuff that Darwin AI developed, from being able to shrink down AI models and neural networks to a smaller size so they can run more efficiently on the iPhone itself versus entirely in the cloud.
Mark, it's amazing. It's somewhat ironic that we often think of AI as something that will destroy jobs, but when it comes to building out AI, it's about actually buying the personnel, the people who are developing these goods. Is that what this acquisition is? Not an acquisition of technology, but of people?
I think it's both. I think they certainly got the right people in there. Alexander Wang He was a very big name and still is in the AI community in Canada, especially at the University of Waterloo. He's now a director at Apple, which is a senior position there in their AI organization. They're building out an office in Canada for artificial intelligence. They seemingly want AI people all over the world. This is a big component of the company right now. It's probably the only group within Apple that's growing at any significant or notable pace. So certainly that, but also they have what was called a generative synthesis engine, that being Darwin AI, to really shrink down AI models and technology for it to be able to run more efficiently on the phone. Now, why is that important? Apple wants these AI technologies to run on the device, to run on the iPhone, to run on the Mac, the iPad, the Apple Watch, the Vision Pro themselves. One, it's quicker to do it on the device using Apple's built-in chips versus streaming it from the cloud, but also doing it on device makes it much more privacy conscious. And as we know, privacy has been a key selling point for Apple's devices, so this fits that narrative quite well for the company. And they're able to do it at a fairly reasonable price.
Mark, just taking a step back and not to rip up the script, but a little bit veer off in a different direction. How much is this really the example of the expansion of big tech? It's not big acquisitions, it's the little ones, the sort of incremental ones that they can go up and they can buy up any potential competitors, at least intellectually, with respect to AI and the new developments. Is this the game plan?
Well, it's an interesting question because, you know, as we know and talked about many times, Apple's acquisition strategy is not about buying major companies, major rivals, right? Apple has been allergic to buying those big companies for a couple of reasons. One, the ethos of the company is to buy smaller startups that they see can help them produce a particular feature, buy the company, and turn it into a feature. Even Beats, that $3 billion acquisition, fine, they sell those Beats headphones, but a big part about that acquisition was buying Beats Music because they wanted to create a streaming music service, and Beats Music is the very foundation of Apple Music. They bought a company a decade ago called PrimeSense that was a 3D sensor company, and they were able to take that acquisition and turn it into Face ID. They bought the company called Authentech in 2012 to enable Touch ID. So it's these smaller acquisitions to enable individual features or to help develop, you know, new services and software and applications. And I think Darwin AI, their synthesis model, is going to help them develop on-device AI. This year, you're going to see them roll out some generative AI programs. They're going to do more next year as well. And so certainly these acquisitions are to help with that. I'm not sure they're trying to squash any competition here. Certainly they maybe don't want Google or Samsung or someone else to get their hands on Darwin AI. But this is a textbook Apple deal, something sub $100 million, not too many people, helps them enable a new function.
Interesting, Mark. Just fantastic. You're one of the very best. We appreciate it. Mark Gurman of Bloomberg breaking it down for you on Apple. And if we get that iPhone, that release later this year, that might be the upgrade cycle that the likes of Dan Ives have been looking for a long, long time. That's Apple. Let me just leave you for the weekend with next week. Next week's just fantastic lineup for you. So Monday, this is what we're going to do. We'll catch up with Lindsay Piegza of Stifel, CS Venkatakrishnan of Barclays, Monica DeCenso of JP Morgan, Claudia Sam of Saab Consulting. Tuesday, on the trading floor of Bank of America, a Bloomberg Surveillance Special, we'll catch up with Brian Moynihan, Mark Cabana, Savita Subramaniam. We're going to catch up with the good and the great of Bank of America, Bram, next week.
I cannot wait. And two bank CEOs coming on to tell us what their view is of lending as we face off with a muddle with that the Fed has to deal with.
Very cool. I think we can go for the weekend now. Ramo, you ready? Lisa's already left.
Yeah.
From New York City this morning. Good morning. Thank you for being with us. Have a wonderful weekend. This was Bloomberg Surveillance.
Welcome back to another special BNP Paribas Open update for Bloomberg TV and radio from Tennis Channel. Australian Open champion Jannik Sinner has enjoyed a perfect start to 2024, and the Italian remains unbeaten after his straight sets victory over Jiri Lehečka to reach the semifinals. 35 unforced errors told the story for Lehečka, while Sinner is now on a 16-match win streak so far this season. And don't forget, Tennis Channel's daily live coverage starts at 1 p.m. Eastern.
operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From New York City for our viewers worldwide, I'm Danny Berger in for Jonathan Farrow. Happy Friday. It is 5 consecutive days of higher yields after dramatic 24 hours for inflation data, but even amid all that, equities are higher on the week. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open with Jonathan Farrow.
Coming up, futures looking to rebound after 2 days of declines. Treasuries, though, struggling to regain their footing as yields keep edging higher. And blowout wage results fueling bets for a BOJ rate hike. We begin with a big issue, looking ahead to Chairman Powell.
The Fed wants to cut, right? They're looking for an excuse to cut because they don't want to get to the point where they're passively tightening as opposed to, they don't want that to happen. But I think that this data does not give them any help in that. It makes it a little bit tougher for them to do it on the time frame that they were looking at. If this had been a more benign number, I think you would have seen that May call come back. And I don't think anyone was looking for anything in March. So they may just not say a whole lot about it, but we'll see.
Bloomberg's Michael McKee joins us now to help set the stage for next week's rate decision. Hey, Mike.
Well, we know there's not going to be much of a decision to make on rates. The question is, where does the Fed go in terms of its projections, particularly for the dot plot? Well, here's what Bloomberg survey of economists finds, that economists on Wall Street that we spoke with think that the Fed will cut rates starting in June, still 3 times this year, every other month, in June, in September, and in December, ending the year at 4.75. They will tweak their forecasts a little bit. The economists think that GDP is going to be stronger this year than the Fed's last summary of economic projections. No change in unemployment, but they do think that inflation's going to be a little bit higher this year. That's going to be one of the real question marks for the Fed is where do they put the unemployment rate? The economist crystal ball sees the terminal rate very difficult to pin down. Where does the Fed end up with this loosening cycle if they get to it? The high figure is 6%, the low is 2%, so you could drive a truck through that. They think QT tapering will not be announced until June. Remember, Jay Powell said they're going to be talking about it at this meeting. It will start in July. Now, are we in recession or going to have one this year? 63% of the economists say no. Just 17% say yes. 21%, a fair amount, think that we will have just very low growth this year. And then finally, the question everybody wants answered, have we achieved a soft landing? Don't know what Jay Powell will say, but the economists we surveyed say no. By an overwhelming 73 to 27% margin, there is still more work to do.
I can't get over that. Someone thinks terminal rate should be at 6%, so we should be hiking at this point, right?
It is kind of strange, but there's a whole debate about where the terminal rate, the neutral rate is.
Yeah.
The median is 3.5. The Fed says 2.5. So there's still quite a difference between the economists and the Fed at this point.
Yeah, that will be interesting to work out, I guess, next year, maybe this year. Mike, thanks very much. Michael McKee there. All right, let's continue the conversation now with Morgan Stanley's Matt Hornback and Investco's Brian Levitt. Matt, you and the team wrote earlier this week that not much has changed. The dots are going to remain at 3. The summary of economic projections are going to be optimistic around that supply-driven growth. Given all of that, and we're now moved from about 4.1% to 4.3% on the 10-year yields, would you be buying this dip?
Thanks for having me on the program, Danny. I think certainly for medium to long-term investors, we think that these are great yield levels to take advantage of. So for the longer-term investors out there, yes, I think this would be a great dip to partake in. For the shorter-term investors, look, I mean, the issue is that economic data has been sending mixed signals. And just the data we've gotten this week and last with CPI and PPI surprising to the upside, but retail sales surprising to the downside. And bearing in mind, retail sales is a nominal figure that suggests that real retail sales were pretty horrible last month and weren't that great in January. So I would say the data's been mixed, and so we're advising a neutral stance towards benchmark duration for our shorter term investor community.
What do you make of that? Are we also going to get the same thing as Matt sees, the idea that long term you maybe want to be buying Brian, but in the short term, perhaps not with the mixed data?
It's going to be hard to time it, but I believe investors should be locking in the yields. And you look at all the appetite for money markets, it makes sense when investors see an inversion of the yield curve, they want to grab the 5% for 30 days. But these opportunities are not going to present themselves forever. It was only 2019 that people were begging for 4%, and you had to go out into high yield bonds or Russian sovereign debt to go 4%. Now you can get it in quality munis, quality corporates, longer maturity treasuries. So I would say lock the yields in. If you think back to November, December, when the market quickly priced in 6 rate cuts, the rates moved quickly. And you had a 10-year that was in the mid-3s before investors could even respond to it. So I would advise investors to not try to be too cute with this. Take advantage of the yields when they present themselves.
At the same time, though, as you were talking about, Matt, so we've gotten higher PPI, higher CPI, but at the same time, retail sales come in weak and maybe much weaker on a real level. We also had Empire Manufacturing coming in weaker. We also had import prices today coming in higher, which seemed to reignite that bond sell-off. Amid all of that, Michael Hartnett at Bank of America has been writing, inflation up, employment down, and U.S. government spending is off the charts. The macro is flipping from Goldilocks to stagflation. Matt, does stagflation need to be part of the conversation right now?
Not at all. Not at all. So, I think when you look at the history of the U.S. economy, it's very rare that we actually have a situation that you would characterize as stagflationary. It did, in fact, occur during the pandemic when the demand for services fell, but the supply of services fell even further. That's a very rare occurrence in the U.S. economy where we get that type of combination of lower demand but even lower supply. That's what you need to have a stagflationary environment. Otherwise, it's just a silly conversation that we would not be having with investors at this point.
Jamie Dimon is having it. Matt, are you calling Jamie Dimon silly? I know that's not what you're saying, but the conversation is kind of being had. Brian, I mean, should we be having it, or are you agreeing with Matt? It's silly. It doesn't make sense to have this conversation now.
I couldn't agree with Matt more. We should not be talking about stagflation. If you go back and you go back and look at 07, people were still having that conversation. The Fed should be raising rates in 2007. You can go find a lot of people talking about that in the middle of the year. That year. This is what happens. You always see this as ahead of the economy slowing down. I think that what you've seen more recently is consumer inflation. At least the momentum of it's been falling. Wages have been fine. You've got some import inflation right now because the cost of commodities have gone up a bit given what's going on in the world. But that slows the consumer. And so we're going to come in for a slowdown here on the economy. And the big debate is whether it's soft or hard. I still see a window to have a soft landing, but the Federal Reserve is going to have to respond. Having a funds rate of 5.25% when their preferred measure of inflation, the core personal consumption expenditure year over year, is 2.8%. They're simply too tight. So no, this is not stagflation. Does the Fed have a risk of remaining too tight for too long? Possibly. But I still come back to first principles, which for me is post-peak inflation, peak tightening, peak rates, historically very good for risk assets over the next years.
And on that last point, Matt, I want to take that to you of how you judge how tight policy is at this moment, because we're, above 5% and nothing is broken. We're talking to Mike McKee about how someone out there thinks 6% should be the terminal rate. You have to admit this economy can handle more than 5%. So how do you judge exactly how tight we are and therefore how much the Fed should be cutting?
Yeah, Danny, I think, number one, you have to understand that monetary policy does not operate in a vacuum. It's never all else equal. And so if we're talking about what happened with monetary policy last year, you have to contextualize it with what happened with other big factors like fiscal policy or balance sheet policy, liquidity policy, if you will. And so when you contextualize monetary policy with a huge fiscal impulse, a huge liquidity impulse that occurred in 2023, it's very easy to understand why the restrictiveness that you would have otherwise thought monetary policy would behave with just didn't come through in the actual data. But that's where 2024 is going to be really different, Danny, is that we're going to lose the fiscal impulse, we're going to lose the liquidity impulse, and we're really going to be able to see how this economy stands up on its own. And ultimately the stance of monetary policy, I think, is restrictive, and so does the Fed.
Yeah, what difference does the fiscal element, Brian, to make of what Matt's saying? We are entering an election year. You have Joe Biden talking about tax hikes for corporations and individuals, though you might get some more looser type of policy from Trump, because if you come in, you want the economy to look better.
Yeah, well, we won't see that until 2025. So, the market right now is focusing on, to Matt's point, less of a fiscal impulse. And so you boil it all together, less of a fiscal impulse, the consumer that seems to be slowing down a bit. This is an economy that's moderating. And to me, that means interest rates tend to go lower. It means that the market is going to start to assess whether it's a soft landing or a hard landing. And you may see some pullback in markets either way. Soft landing, you think of 94, 95, the markets fell 8, 9, 10%. Harder landing would be something worse than that. But either way, we look ahead, and I think the Fed should be looking ahead to normalizing policy. You start to normalize policy, steepen the yield curve, that tends to be a better backdrop for risk assets. So I think the Fed is a little bit behind, and I look forward to seeing them move.
Okay.
I think we all are. Matt, Brian, stick around with us. Much more to discuss. But at the moment, let's look at some of the stocks that are moving ahead of the opening bell. With that is Abigail Doolittle. Hey, Abby.
Hey, Danny. And at this point, we do have the U.S. futures moving to the downside just a little bit. One stock that is certainly weighing is Adobe. Shares are down 12%. This after they posted a weak sales forecast for the current quarter. They added AI tools to some of their main products recently. So the fact that the forecast is a little bit light, investors worried that some of the AI startups might be taking some share. Coinbase Global down 4.1% in sympathy with Bitcoin back below $70,000 per Bitcoin right now, down about 4%, right below $68,000 per Bitcoin. And then Micron, a bright spot, up 2.3%. Citi has raised its price target to $150, suggesting quite a bit of upside could be ahead from $95. That's a street high price target. It's based on AI, and it comes ahead of earnings next Wednesday. I would say that's a pretty high conviction call from Citi on Micron.
Yeah, some of those tech declines, though, dragging down the overall index, NASDAQ down 1/3%. Abby, thank you so much. Now, coming up, Japan's workers secure the highest pay hike in 3 decades.
The key factor is how we can extend the current momentum of wage increases, maybe next year and onward. So I think that will be happening because the key factor is huge labor shortage.
Could a rate hike be coming at the Bank of Japan? We're going to take a look at that next. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock.
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
This is Bloomberg.
The key factor is how we can extend the current momentum of wage increases, maybe next year and onward. So I think that will be happening because the key factor is huge labor shortage. Consumers should be more confident that wage will be increasing furthermore, and we want to be the spearhead.
Japan's largest union group announces the largest pay hike for workers in over 30 years. That fuels bets that the BOJ will raise rates at their meeting next week. If they do so, it will be the first time since 2007. Bloomberg's Enda Curran joins us now for more. Enda, they have the pieces in place. They have the wage negotiations. So do they move?
Well, it would appear as though this is the final piece of the jigsaw now, Danny. Like you say, a gain of 5.28%, blowout, well above expectations, that multi-decade high that you mentioned. And it's worth remembering the broader context here. Remember, for years, Japan was all about deflation. For years, Abenomics and that huge monetary experiment was all about trying to get wages to increase sustainably. And here we go. It looks like Japanese wages are finally starting to take off. The question, of course, is how sustainable they will prove to be. But some of the corporate comments around the wage union outcomes overnight suggest that perhaps this demand is real. Now, in terms of the BOJ, this was the metric that everybody was looking to see when they might move, when they might pull out of negative territory and start to normalize policy. I think some economists are saying now it's kind of gotten to the point where if the BOJ didn't move next week, it's almost like they would send bigger jitters through markets, because markets would be confused about when exactly the BOJ will move. So a very strong wage gain reading, and it does seem, on the outside at least, to lend itself to the BOJ taking a step on policy.
Enda, appreciate it. That's Bloomberg's Enda Curran. Matt Hornback and Brian Levitt are back with us. Brian, here we have stronger wages than expected, yet it is a weaker yen, and it has been a weaker yen for most of this week. Does it make sense to fade the BOJ speculation?
Well, the reason you have a weaker yen right now is, of course, we're recalibrating where the Federal Reserve is going to be as well. And so the expectation was the dollar would be moderating as the Fed starts to ease and the Bank of Japan starts to tighten. So that's a little bit of a recalibration here in the short term. Ultimately, the end of policy tightening environments as rate differentials between the U.S. and other developed countries start to narrow, you typically see the strong dollar environment moderate, which would create a better backdrop for risk taking. So I don't think that story goes away, but it's a short-term recalibration, given that the Fed. Look, it was only a handful of weeks ago, markets were pricing in 6 cuts. Now, the last we see, 3 or 4? So that's a pretty big difference.
I mean, I would counter that and say the yen has also been weakening against the euro. It's not necessarily just a dollar story. And Matt, one of the arguments I've heard, this comes courtesy of Derek Halpenny of MUFG, saying that the risk is that the BOJ moves, but it's broadcast as a one and done, which means that any yen buying quickly turns into selling. Is that a risk that even if the BOJ does normalize, that's it and they stop there?
Well, it's certainly a risk. I highly doubt that they're going to broadcast a one and done type of a policy path looking forward. I mean, with these wage increases that we're seeing and the possibility of more to come in the following years, I do think it's prudent for the BOJ to paint a more optimistic picture on the economic outlook, and alongside that optimism is likely going to come higher interest rates. Now, when it comes to the yen, I think that the issue, in part for the time being, is that the markets are already pricing in a continuation of normalized rate policy. So in order to get the yen to move substantially on this BOJ meeting, you're going to need the market to reprice to an even higher path for short-term interest rates. And whether or not that happens, I think, will in part depend on the guidance that comes out of Governor Ueda. But but to Brian's point, and this is where I get to agree with Brian, we do think that the lion's share of the movement in dollar yen is going to come from the U.S. side,
right? And
so it remains to be seen how that plays out.
You guys are allowed to agree on this program. We love a little bit of agreement, but also some healthy disagreement too, because that's what makes the market. But maybe that's my part to play. Brian, on this idea that the market has already been pricing in a continuation of rate policy, it has been well telegraphed, at least from media reports and from what we've heard from BOJ policymakers looking at wages, that they want to start normalizing policy at some point. If it is well telegraphed, what does that mean for the repatriation of Japanese investors moving out of treasuries and into Japanese assets? Is that type of movement lessened by the fact that it has been so well telegraphed?
No, I don't think so. I mean, this has been in the, it may be telegraphed, but this is something that hasn't happened in so long. So it is a shift. The fact that you're seeing higher nominal growth, in that part of the world for the first time in decades is a shift. And I would still expect to see markets move as a result of it.
And what about the stock market, Matt? I mean, we've seen huge gains, near records. Does it make a difference if Japan starts to normalize? Can the gains continue?
Well, yeah, I mean, and this holds a special place in my heart because that's where I started my career at Morgan Stanley is in our Tokyo office. And, you know, the Nikkei was substantially below its 40,000 highs from the 80s, and now we're back. So I do think that the equity market is a story to focus on. It's not clear to me that, you know, 25 or 50 basis points higher in short-term interest rates is going to derail the trend in the equity complex in Japan. But what I do think is interesting is the interplay between dollar-yen, the currency pair we were just talking about, and the Nikkei 225 or the Topix index for that matter, and kind of the relationship that those two assets play with one another. Because at the end of the day, the people that are buying the Nikkei at this point are largely from overseas locations, and not all of those investors want to take that currency risk. So we do see this feedback loop between higher Nikkei 225 and higher dollar-yen, which, by the way, is another factor that I do think has helped keep the yen weaker than maybe you might have otherwise expected, Danny.
Matt, I'm so happy we were able to give you a throwback to your days in Japan, to your starting days at Morgan Stanley. What a lovely way to end it. Matt, Brian, we're going to have to end it there. Matt Hornbach and Brian Levitt, thank you so much. All right, just some more economic data hitting the terminal. Let's get over to Abigail Doolittle, who has the details. Hey, Abby.
Hey, Danny. Yes, we do indeed have some breaking news here. The U.S. February industrial production broke just moments ago, and it did rise 0.1% on a month-over-month basis. That's slightly better than the estimate for 0%, but where the bigger surprise is for a January revision. We are looking at a revision to down 0.5% from down a third of a percent. Excuse me. That is yes, and that is a revision that suggests that maybe January, the industrial production, that output from some of the industrial establishments, well, it was a little bit weaker than expected, Danny.
And that data having a big impact on equities, down about 1/3%. More hot inflation data coming in. Abby, thank you so much. Now, coming up, we're going to get to your morning calls, and later, SoFi's Liz Young says, "Don't fight the tape." She's going to join us at the opening bell to explain. This is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
What is going to keep Green World Cup? This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Your equity market just opening up this morning. We are extremely sensitive to the data. We had PPI come in hot yesterday. We just got import prices coming in hotter too, and industrial production being stronger than we had expected. The net effect of that is a quick turnaround in equities. The future session had been gaining. We now move to losses, down 0.6 for the S&P. NASDAQ dropped 0.7%, but elsewhere, we're getting ready for St. Paddy's Day. Jameson up and celebrating. When it comes to this bond market, it is a 5th day of higher yields. Yields moving up only by about 1.5 basis points for the 10-year, but what a trip we've had this week. We started the week below 4.1%. We are at 4.3%, 5 basis points away from testing the high of the year so far. Will the Fed reduce their dots next week? Does it matter if they go from 3 to 2? Euro dollar little change this morning as NYMEX crude moves lower. We're still, though, just under $81 a barrel. Okay, one of the stocks we need to be watching at the open, it is Adobe. Shares moving lower, sharply lower, I should say. They posted weaker than expected sales due to mounting AI competition. Abigail Doolittle has more. Hey, Abby.
Hey, Danny. Yeah, we're looking at a drop of more than 10%. This is the worst day since September 2022, so investors really not liking this. Now, relative to the quarter that was, it was okay. They came in slightly better, but relative to the guidance, to your point, it was weaker than expected, especially on the sales side. Now, it's not a huge miss, but it came in at the range of $5.25 billion to $5.3 billion. The estimate, $5.31 billion. So again, a small miss, but to what you were saying in terms of AI, they, of course, are the leading software, longtime leader in software for creative performance professionals. And there has been some anxiety about what they'll do relative to AI pressure. So they have added some AI tools to some of their key products. So the fact that this forecast is coming in a little bit light with those expectations of being boosted by AI, suggesting that maybe some AI startups are taking some of their business. Now, on the other hand, Danny, the CEO is saying that the expectations were a little higher than maybe what they should have been. So either way, though, if it's the weakness that really is a disappointment around AI, or the bar was too high relative to the guidance, there's no question the stock down 12%. Again, the worst day going back to September of 2022.
Yeah, tough stuff. Abby, thank you very much. Okay, let's stick with earnings. Ulta Beauty topped fourth quarter estimates, but results are getting overshadowed by a weaker outlook and softness from its cosmetics unit. Simone Foxman has more. Simone, this is interesting because it had been beauty, it had been cosmetics that was supporting all the consumer names. Not so in this case.
Yeah, and frankly, that narrative has been kind of going out of the market for a little while. But again, this retailer echoing what we've heard from many retailers over the past couple of weeks. Fourth quarter was great, but we're not so sure about the fiscal year. Oppenheimer saying, though, perhaps some of the weakness we're seeing this morning is because investor expectations were even higher than what the sell-side estimates were. If you look at the fourth quarter here, everything pretty much ahead of estimates. Sales up 12% year on year. They were $3.6 billion. Comp sales up 2.5%. Earnings per share $8.08 versus an estimated $7.57. Even looking at the year forecast, most things were roughly in line with what the sell side had anticipated, though there were 2 weak points. Earnings per share expected to be $26.20 to $27 versus an estimated over $27, and margins a little weaker as well. Skincare remains the fastest growing category at Ulta Beauty, but William Blair pointing to that softness in those prestige cosmetics as the one clear negative in the print, talking about how more competition and also the back half weighted element of these forecasts likely raising some questions with investors this morning. That said, the sell side remains bullish, and you look at Oppenheimer telling clients to take advantage of some of the weakness today. However, we are seeing shares drop the most since May 2023, Danny.
Simone, thank you very much. Okay, another big mover that we need to watch this morning, it's Groupon. It's swung to a profit in the fourth quarter, but that's still not enough to get the shares moving higher. Isabel Lee has more. Isabel, it is a punishing market this morning.
I know, it's looking like it's a red across the board, and we have Groupon shares sinking 9%, and that's despite the company meeting estimates. So we have revenue coming in at $137.7 million. That's slightly higher than estimates, though 7% lower year on year. A big chunk of that came from North America, $99.9 million to be exact. International revenue made up the rest, but both are down year over year. But despite the revenue downturn, the company has managed to post a net income of $28.5 million. And that's a significant improvement from the loss we saw in the same period last year of around $54 million. So even if this is generally what you would say as a good report, investors aren't liking what they see. But the big thing I think that we can take away from this report is the company emerging from the liquidity concerns that plagued them last year. So it cast doubt on their future, but now we have the interim CEO saying that they're behind that. And for instance, the company now has operating cash flow of $55 million. It has free cash flow of $51 million. Although full year was negative at $78 million. Groupon's North America segment and international segment saw a decline in revenue year over year, and it's really just because of a decrease in demand. And we have inflation coming up, and people are feeling more pinched, so maybe that's why, but it really remains to be seen. Shares are now pairing some of its losses, though, but still down nearly 7%, Danny.
Isabel, thank you very much. Let's turn to tech now. Apple has acquired a Canadian AI startup ahead of its push into artificial intelligence this year. Bloomberg's Alex Webb has more. Alex, Apple looking to the north.
Yes, they've acquired this startup, Darwin AI. It's several dozen employees, so clearly not in any way transformational for Apple. It often does these relatively small acquisitions to boost either technology or just headcount. Now, don't forget, Apple was slightly left surprised when OpenAI released ChatGPT in November 2022. It took Apple and many other companies by surprise. As much as Apple does lots of things under the hood with AI, for example, with image recognition on your smartphone, with some of the autocorrect features, it doesn't have a big public-facing generative AI product. That's one of the reasons people suspect that it shut down its car project earlier this year. Lots and lots of very smart AI experts working on that. It is now moving them over to its core AI projects. The thing is, with this company, it does have some very interesting technology. It's about actually simplifying some of the AI processes. That could help Apple because it likes to do a lot of that stuff on the device rather than in the cloud. We don't fully know whether that's the reason. It could be as simple as what is known as an acqui-hire, getting top talent into your company by acquiring the company that employs you.
Alex, thank you very much. Our top talent of Bloomberg, Alex Webb. Now, shares are lower, equities are lower by about 0.5% for the S&P, but we are still a long ways away from actual ruin. The stock is still higher. The stock exchange is still higher on the week. And SoFi's Liz Young also notes that the S&P 500 is on its longest stretch of no 2% declines since 2018. She writes, this signal neither sends a warning sign nor is a clear-cut signal of further upward momentum. Instead, it's simply a testament to how strong the market has been for over a year, particularly during a time when many were expecting a recession. Liz joins us now. Liz, it is remarkable how this market has turned out so far this year. And it's made a lot of folks uncomfortable. That idea that we haven't had a correction, let alone a 2% decline in this stock market. So what do you say to clients who feel nervous and want to remain on the sidelines?
Well, the interesting part about where we are in the year right now, it's not even just the 2%, the days without a 2% correction. We are now at the longest yield curve inversion that we've ever seen. We just surpassed that record. We are on the doorstep of the longest wait between the last hike and the first cut, and we continue to push cuts out. So there's a lot going on in this cycle that feels elongated, and I think it's testing investors' patience. It's testing our resilience, but it's been really, like you said, remarkable that the market has held up this well. So what I would tell clients right now, and what I would tell people who are nervous, because frankly, I've been one of them who's been nervous, and all the way through 2023 was worried about there being some sort of crack in the economic data that would send us over the edge, and it just never came. Now, that doesn't mean that it's not going to come eventually, but in the meantime, momentum is a very powerful force. And I think what's going on right now is, obviously, we're seeing a breather in some of those big cap tech names, some of the ones that drove the market all the way through 2023, which is natural. I don't think you'd find many people who said that those names were attractively valued at this point, and they're obviously very crowded trades. But what's happening is investors still have risk appetite. There hasn't been anything yet that's convinced them that risk appetite should go away. So even when they're taking some money out of those winners, they're just rotating into other parts of the market, which is sending the signal that we're broadening out and that the market is stronger than many thought it would be.
I'd say, Liz, it is quite remarkable that $56 billion flowed into U.S. equity funds over the past week, which would be a record. And if I were to tell you that and say in the same breath that this is happening, that money market funds hit yet another record also this week, the third consecutive week we've seen a record in money market funds, that those two things are coexisting together, you probably wouldn't have believed it. So is cash more sticky than we thought? If people are fine chasing risk, but in the same breath, fine parking some of and a lot of their money in money market funds?
Well, I do think cash is sticky at this level of rates. And as we continue to get stronger economic data and inflation data that surprises to the upside, even if just a little bit, you see the stickiness in rates, which keeps what you're getting paid to sit in cash higher. So it is a rational investment decision in some ways to stay in cash and get paid while you wait and while you try to figure out where the opportunities are. What's interesting about this point right now is that there's this huge debate over whether or not we are in a position of late cycle euphoria, meaning people are engaging in the FOMO trade. The big caps are leading. You've got this kind of risk appetite that is not necessarily unhinged, but perhaps not all that supported, or are we in a mid-cycle expansion phase, meaning that the economy continues to grow, we have a long ways to go before the business cycle is over, and that debate, you could make the case for either side pretty easily. You could find the data to make the case for either side. I am on the side that I think we are more late cycle euphoria, and this late cycle portion could last a very long time and already has lasted a very long time. But that doesn't mean that just because it's lasted a long time that we have gone back to be early or mid-cycle.
If we are in this stage of late cycle euphoria, Liz, does that mean the hope for trades like value, which by some measures is its cheapest in 20 years, that small caps tumbling 2% yesterday continues to underperform large caps, that trade can't really take place? Because usually you need that economic upswing to really get into those names that are more cyclical and are cheaper.
Well, you're seeing some appetite for those names. You've seen industrial stocks do really, really well. You've seen energy stocks start to come off the mat. You've seen materials come off the mat. I think that's more due to the fact that inflation has surprised to the upside. But you are seeing some of those cyclical names catch a bid. The small cap piece is what continues to perplex me and what continues to worry me, because you do want small caps to confirm the move upward in the broader market. Small caps employ 50 to 60% of the American economy, and they are more financed by debt. So if small caps can't quite get up above that certain line that they've been trying to get above, there's a resistance line that they've been trying to get above for a long time, and they can't quite break above it and stay there, that's something that still sends the signal, like I said before, that we're more late cycle than mid cycle. If we were in the mid part of the cycle, the things that I would expect to see are an unemployment rate that's higher than it is now, maybe not concerning, but higher than it is now and falling. And I would expect things like small cap value to be leading the way. But even when we saw that rally in small caps, starting at the end of the year and into the beginning of this year, it was largely led by small cap growth on the heels of the healthcare rally and the weight loss theme. So it's not the same things that you would expect to be leading us out of an earlier mid-cycle behavior.
If we are, again, in a late cycle, more euphoric type stage, Liz, and it's extended, that makes it quite difficult to try to hedge yourself, because the idea is that it is extended. It can go on for some period, so hedges end up not paying off. What we've seen is that the right tail has become the new left tail. Folks are more willing to hedge upside risk than they are downside risk. How are you thinking about hedging these markets and hedging gains and potential losses?
Well, I think that investors who still have a position in cash that's paying a high percentage is a good way to hedge it. And you still can look at treasuries. I know that sounds like such a snore, but you look at treasuries, particularly on the short end of the curve. If we are approaching, and perhaps it's getting further out, but at some point we are approaching the first Fed cut, the short end of that treasury curve has to come down when that becomes closer into view. So you do want to hedge with some of those things. I think classic defensives are also important to have a position in. So things like utilities and staples, not to mention when rates do finally come down, you probably want to own stocks that will pay a healthy dividend, which is consumer staples, utilities, even some energy stocks. So I think you can look at those as a hedge. And the last thing I would say is, if we are in fact late cycle, and if there is some kind of macro data or macro shock that comes in and disrupts the cycle or disrupts the upside in stocks, the thing about that type of period is that correlation goes up. So most asset classes will go down together, at least for a brief period of time. It's difficult to find anywhere to hide. So you do want to make sure that you have exposure to the places that maybe wouldn't move, things like cash, for example, or things like treasuries that would move but act as a good hedge.
Yeah, the hedge of the fire sale. Liz, thank you so much. That is SoFi's Liz Young. Also worth mentioning while we're talking about options, it is triple witching today. We're going to get $5.3 trillion worth of options expiring. Perhaps some of the reason we're seeing shakiness in stocks. Your equities this morning on the NASDAQ down nearly 1%, the S&P down 0.5%. Coming up on the program, the TikTok bill is now stalling in the Senate.
Nobody's talking about a ban. We're talking about transferring the ownership and the algorithm to some other control that's not Chinese.
The latest on TikTok's troubles in Washington next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors, including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
I think we need to get this done. And what, again, we need to make clear is nobody's talking about a ban. We're talking about transferring the ownership and the algorithm to some other control that's not Chinese.
That was Democratic Senator Mark Warner of Virginia speaking yesterday on Bloomberg. The TikTok bill, the one that passed in the House, now faces an uncertain fate in the Senate. Lawmakers are walking back the idea of fast-tracking the legislation that would force the app's Chinese owner to sell it or face a ban. Bloomberg's Anne-Marie Horder joins us now. So we get this quickly going through the House, and in the Senate, it just stalls. I guess Steve Mnuchin might have to wait a while longer if he wants to buy it.
Well, I'm glad you brought up Steve Mnuchin and potentially this consortium he might put together to buy it, because what we heard there from Senator Warner, who is the chair of the Senate Intel Committee, is kind of coming up against what TikTok is saying. TikTok is trying to tell their individuals who like to use this platform, the 170 million Americans, that this will be a ban. And what Senator Warner said is that's not true. We don't want this to be seen as a ban. We want it to be a divestiture. So you have to remember, this is the context that is at play here. TikTok wants those viewers to know that this is going to be a ban. The Senate's like, actually, we just want to find a buyer. What you can see in the Senate, though, there's a lot of issues that are being raised. This gives too much leeway to the president. What happens potentially, does this have any issue with First Amendment for free speech? So basically what's going to happen, Danny, the House moves really quickly. The Senate, the upper chamber, they will remind you, is going to take their time and look through this bill. Potentially we could see some amendments and some changes.
Emery, we also have to talk about what happened about an hour ago. You broke on your show Surveillance that Netanyahu has approved an operation for Rafah, that is evacuating civilians and then starting a ground operation. There's been a lot of talk on the U.S. side from this. Biden has talked about it. We can debate what color the line he drew on this was, but we heard from Chuck Schumer yesterday saying that Israelis need to replace Netanyahu. How much more awkward and tense does it make the approval of invading Rafah?
Well, yeah, this is going to be incredibly intense between the ties between Netanyahu and the Biden administration, especially off the heels of that scathing speech from Senator Schumer yesterday, saying that basically there's no path forward in Israel with Netanyahu at the helm. What we have here is Netanyahu coming out from the Prime Minister's office talking about the operation for a ground invasion advancing. First, that means evacuating those civilians. Remember, Danny, when the Israelis went into Gaza in the north, a lot of those civilians went to this city of Rafah in the south. And now the United States said weeks ago, the Israelis need a credible plan to make sure that those civilians are out of harm's way before they go into Rafah. And the president also signaled Rafah could be a red line. I like that you say it was this nuanced approach to a red line, because it was. The president said there is a red line, but at the same time he also said there's no red line when it comes to weapons for Israel, when it comes to the defense of Israel, the Iron Dome. So potentially what Aaron David Miller has talked about is this pink line. But certainly this is going to ratchet up tensions we have seen between Jerusalem and Washington. And amongst all of this, you have a ceasefire negotiation ongoing for those hostages that remain in Hamas's custody.
Yeah, I mean, look, whether you're talking about a line, whether it's red or pink, Biden talked about a line, so it gets awkward if the line gets crossed and nothing happens. Anne-Marie, thank you so much. As always, that's Bloomberg's Anne-Marie Hordern. Okay, let's get to some of the sector price action this morning. With that is Bloomberg's Abigail Doolittle. Hey, Abby.
Hey, Danny. Well, we do, in fact, have this decline for the S&P 500 down about 0.6%. So not surprisingly, it is a bearish tone for sectors, tech being the worst sector, down 1.3%, consumer discretionary, and of course, Adobe, one of those tech stocks that is weighing, and then healthcare, communication services. To the upside, energy, materials, utilities, industrials. You were mentioning earlier that it is triple witching and the rebalancing. On that, we do have the stocks lower being dragged on by NVIDIA. Lots of talk about what that's going to look like, the expiration for NVIDIA, and then Supermicro, Computer, and Deckers, well, they're being added. And we do have some interesting breaking news to talk about too, Danny. If you recall last year, there was the lawsuit against the National Association of Realtors and other realtors around the way commissions were calculated. There was an award of greater than $1 billion. They have, according to the New York
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Paul, I'm from the UK and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype or manufacturing possibilities with investment or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did rather all in one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the Gel Razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Regional Sports Network.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
We're looking for. As far as the markets right now, the major stock index is moving lower. Expect heightened volatility today. We have the expiration of options. Sam Stovall, the chief investment strategist at CFRA, says a market sell-off is not out of the question.
I think right now prices or the market is priced to perfection, with the PE on the S&P 500 trading at a 31% premium to its average forward 12-month PE over the last 20 years. So I think that, in a sense, some investors are looking for a catalyst for a minor correction.
And the shares of Adobe, they're plunging right now. Worst performing stock in the S&P 500 and the NASDAQ. They, of course, delivered a weak sales outlook for the current quarter. Also concerns about competition from AI startups. Looking at the markets right now, we have a guest market commentator today. Dylan, can you tell us what the market is doing?
The S&P is 32 points. Lower.
I didn't put lower in there. Sorry.
The Dow is down 143 points.
How'd she do? That was pretty good.
That was pretty good, actually, I think.
Lose my job. I embarrass myself every day like that, Dylan. Anyway, we check the markets for you all day long. Right? You're done. Right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
Okay,
Mom, you raised a cute kid there.
That was my daughter. She's coming to work with me for half day. Schools we're closing early, and I couldn't get any childcare. So hence we have our guest radio person, and she does not want to be on TV or radio or anything of the like. So that was awesome. I had to bribe her with my phone for that, but nice job. Good job, Dylan. We appreciate that market check. She doesn't care. Okay, anyway, here we go. University of Michigan sentiment, as John Tucker was just reporting, falling just a bit. Let's get more data on it with Joanne Shu, University of Michigan Surveys of Consumer Director. She's breaking it down right now. Okay, so Joanne, what happened here?
Essentially, not a whole lot. Consumer sentiment has been remarkably stable over the last 3 months. We've had very little movement since January, and that's following the enormous gains that happened in November and December, between November and January. So not a whole lot of change. Consumers don't really perceive any sort of clear developments in the economy. Possibly more importantly, inflation expectations also remarkably stable. Consumers still expect inflation to slow down both in the year ahead as well as the long term.
You know, we've been talking so much on this program about where investors are expecting the Fed to go. Can you dig in a little bit to what you think consumers' read is on what interest rate cuts are coming? I mean, do they feel confident? Are they a little bit more enthusiastic than investors are, perhaps?
Consumers are expecting, broadly speaking, they are expecting interest rates to come down over the next year. And, that was a pretty sharp change in consumer views or consumer expectations over interest rates over the last 3 to 6 months. So even though most consumers really aren't paying that close attention to developments in financial markets, more broadly, they do expect the interest rates that they face to come down. We don't really know much about what they're thinking in terms of timing, but every month there is an increasing number who expect interest rates to soften.
I mean, do we read anything from the fact that things are just slowing over time? Like, is this sort of the tightening that we've been waiting for and the consumer sentiment a bit lighter so they just buy and spend less? Like, is this kind of what we've been waiting for the last year and a half?
It's possible, but it's the part of the thing is that excuse me, part of the reason that consumers are not really moving a whole lot in the sentiment is that there's a good chunk of consumers who are thinking about the election ahead, and and a lot of consumers are telling us spontaneously that the trajectory of the economy very much depends on the result of November's election. So I think there are people who are just reserving judgment right now. Whether that's going to affect their spending is a little bit hard to say, because I think even though they're reserving judgment, they're still expecting two possible outcomes, we'll see in the months ahead as that comes into focus if that starts to move sentiment one way or the other.
I noticed that in your data you do poll Republicans versus Democrats versus independents on how they're feeling. So is there any interesting change there this month?
I would say it's a little early to say, because at the preliminary reading, we don't want to draw too many conclusions out of small samples, divided into 3 different parties. What I will say is that this general stability that we're seeing, we see that across party as well. So the enormous gains in sentiment that we saw November to January, and then the stability between January and March, all 3 of both of those patterns are visible across Republicans, independents, as well as Democrats.
Interesting. Hey, Joanne, we love it. Thank you for the instant analysis. It really helps us as we get through all the data here. Joanne Shu of University of Michigan. Stocks don't like it, although stocks didn't like anything this morning. The NASDAQ is now down by about 1%. Abigail Doolittle is here. Bloomberg News and Markets reporter joins us. Extension of yesterday?
An extension of yesterday, going into next week's Fed meeting, and the possibility of the Fed in some way walking back their language around cuts just based on that hot PPI number. I would also say, though, it has to do with the triple witching, the options expiration today. I think it's $3.5 trillion worth of options contracts are exchanging hands. We also have the rebalancing, and this is really interesting because Supermicro Computer, I just found this out yesterday, not that it's being added. I just found out yesterday when I was putting together some work on it. Over the last year, if you had to guess how much this stock was up, what would your guess be?
A lot, 100%.
A lot. I would say a lot.
Almost 1,200%.
So a lot.
Yes,
so a lot feels like a good statement.
Yes.
Cool.
Well, so it's being added to the S&P 500. Today it's down 3.8% because a piece of that rally was also after the news came out a few weeks ago that it was going to be added, because, of course, index managers were going to have to wait to it. Decker's also being added. But on these days of reconstitution and options expiration, we tend to get some volatility. We also tend to get some volume. So we have that. The S&P 500 right now down 0.75%. The NASDAQ 100 down more, down 1.2%. The stocks also down. The Russell 2000, though, Alex, the one that you were talking about outperforming earlier this week after underperforming a little bit yesterday, it's outperforming again today. Now it's up slightly.
So triple witching, I mean, it's an interesting phrase. Love that.
A little spooky, right? Like it's a little dramatic relative to what it actually is.
It really is, but it happens quarterly. So
it does.
Can you give us some context here? What are you expecting this time around versus past episodes?
Well, so I'm not in there seeing the actual flow of options, so I'll have to talk to some of the experts that we talked to, and Steve Sosnick of Interactive Brokers, he'll be joining us later today around 2:55 to talk about that. But what I can say is that when we think about triple witching, so it's when you have stock options, stock index futures, and stock index options contracts all expiring at the same time, it really does bring the volatility and volume. So I think that we can expect the volume. It doesn't always bring the volatility necessarily to the downside. Right now, that is what we're experiencing. The one that stands out to me the most was back in March of 2020. The week into it, that whole week, basically, stocks slid 15%. They also slid the following Monday, but that was basically the bottom out of the March 2020 sell-off. So sometimes it resets the table. Now, if that is the case, and I think Chris Murphy over at Susquehanna had told me subsequently to that one, that was one of the biggest ones ever. since we've had this huge rally, could this one possibly be a reset to the downside? We don't know that, but that's something that comes to mind when I think about the March 2020, that it really turned out to be literally the bottom in that sell-off.
Here's my question. Every day I try and come in and I try and think about my question of the day, right? Like, what is the big theme today? I gotta be honest, I don't see anything today. It's like, are we waiting for good news? Are we waiting for more bad news? Like, what are we waiting for at this point?
I think we're waiting on the Fed. I go back to the idea that
so just a dot plot then. We're waiting on a dot plot.
The dot plot, but also the color commentary. If Fed Chair Jay Powell changes his tone in any way on Wednesday, suggesting that it might not be June or that 2024 might not be the year the cuts, or if he suggested it's only going to be one cut, I just think that given the fact that we've had some of this hot inflation data, into it you had Torsten Slok and some other folks talking about the idea that there might not be any cuts this year. And from the standpoint of just thinking about it and the 70s and the fact that they don't want a repeat of sticky inflation that will take a decade to get rid of, it does make sense to think that maybe they won't be cutting in June. Maybe they will only be cutting once. Maybe they won't be cutting at all. If they give any credibility to that, I think that there's going to be a major problem for the stock market. So I think investors are waiting to hear a confirmation of that they will be cutting and that they will be cutting in June and they will be cutting 3 times, or the opposite.
Abigail, thanks a lot. I don't envy your job today trying to track all those flows and all that. Abigail Doolittle joining us there. One stock we are watching, though, is Boeing. It's up by about 0.7%, but the headline here is that apparently Boeing is now advising airlines to check the cockpit seats on its 787 Dreamliner jets after a seat mishap likely pushed a pilot into the controls, causing a sudden, terrifying plunge on a flight to New Zealand this week. The flight attendant was serving a meal, and therefore all of this wound up happening. George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst, joins us now. I mean, this feels like, okay, yeah, it was a mess up. Big deal?
I'm sorry, I didn't catch that.
Big deal or no?
No, I don't think it's a big deal. I mean, if you were on the flight, obviously it was a big deal, and so we hope everybody's safe and okay after that. But, the 787 has been operating for a lot of years now. This is the first of this incident I've heard of. It sounds like there might not have been a safety device in place that allowed the seat to be adjusted. And so my guess is Boeing, out of abundance of caution, has pushed out to the fleet, hey, make sure that this plastic cover or whatever safety piece is in place and you don't adjust the seat by mistake. And but again, I think it's not a major issue. Right now, there's definitely a heightened amount of awareness around anything that happens in a Boeing airplane. I think it's a little bit of that.
I take your point that it's not a major issue in terms of this particular type of jetliner, but I do wonder about what the read across is going to be for the average consumer, because they're not short of news from Boeing that they've seeming to have one mishap after another. And I wonder if consumers are really going to be able to make the distinction between this jetliner versus that jetliner.
Yeah, agreed. I mean, I've seen a lot of press on every little thing that happens on any Boeing jet right now. I think, clearly it's getting a lot of clicks, and so the media is going after it pretty hard. I think at this point we're still in this situation where as the problems with the MAX fade, I think some of the demand for these stories should fade. I don't think most people are going to the airport worried about what airplane they're flying. I talk to a lot of people about where they're flying and what they're flying all the time. I'm an aerospace geek, so I'm still hearing people that aren't in aerospace say, hey, yesterday I knew I flew a MAX, but they're still getting on the airplane. So I think, we're not at that point yet where people are sort of rejecting flying Boeing products, and I mean, that's a positive for Boeing, obviously.
I think, Jen, for like a hot minute, maybe it was on Priceline, you could search the type of aircraft after, I think, the panel blew off and stuff, and you could search your aircraft.
You could. That's got to be totally a function of consumer demand.
Yeah, but I wonder how many people actually cared or looked at it, to George's point. George, in the meantime, we learned a lot about the airline industry this week. There was a conference, I think it was JP Morgan, right? Then airlines, particularly Southwest, was warning of, in essence, some slowing demand. What are the order books like for Boeing? Like, how are they navigating that with their customers?
So, I mean, the order books are really, the backlog is very strong for Boeing. And so, like on the 737, 5-6 years worth of backlog on that airplane. That's why it's so disappointing when, one of their major customers like Southwest comes out and says, we've been told by Boeing we're not going to be able to get this many jets, all the jets we wanted this year. There's a lot of work to be done for Boeing, and that's part of their recovery story, is increasing build rates, which is going to boost their profits, boost their cash flow. A lot of folks were looking for that to happen this year. When someone like Southwest comes out and says we're not going to get all the airplanes this year, that means we're kind of set back another year. But they need to start to build that backlog and keep those customers happy so they don't go away. The longer the delays happen, the more risk there is that customers have an out in their contract and can walk away from their orders. But the backlogs are very strong for the 737 and the 787. Its major competitors, the A350. The 787 has a larger backlog than the A350. Been in service a long time. Airlines love it. So right now, backlogs are very strong at Boeing. They just have to start building airplanes well.
Looking at the Boeing stock year to date, it's the second worst performer in the S&P 500. I mean, when is the stock story going to start to turn around?
That's always hard to say. I think you need, obviously, some level of sentiment to change for people to be excited about this. I personally think that this purchase of Spirit Aerosystems that's been floated, I personally think getting that done could put a bottom under the problems Boeing's having in their manufacturing process, and that getting that bottom underneath, I think that this quality story, that's going to be key, I think, to keeping investors happy.
All right, George, really appreciate it. Thanks so much for hopping on with us. George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. You made me think, and I went to the S&P. No surprise to me, but Tesla is the worst performing stock on the S&P so far this year. NVIDIA, the best. None of that surprises me, but GE's number 4.
That is incredible. And then right ahead of Marathon Petroleum, and then Tapestry, luxury goods.
Interesting.
So it's like this is not clicking with my idea that it's all about semiconductors and tech at the top.
Yeah, wait, Tapestry is luxury goods? What is Tapestry again?
I think it's Coach.
Carole King.
No.
Oh, I thought it was a song.
I thought it was Coach and Michael Kors.
I believe
you. It is Coach.
Mid-luxury. Affordable luxury? Or are we calling
luxury.
that right now? American luxury?
Yeah.
Okay. All right, we're looking at the S&P is down 0.5%. Volume, though, nice and high, but that's got to be a triple witching kind of scenario here. We got a lot coming up on the show. We're going to speak to Michael Halen coming up, Bloomberg Intelligence Senior Restaurant and Food Service Analyst, about McDonald's. Apparently, there was we have a slowdown in consumer spending, but also there was an outage that was affecting stores across the world. Tucker, are you a McDonald's person?
I'm going to get a Shamrock Shake after work.
So is it just a shake but green? Just want to be clear.
Yeah,
this is
it.
Bloomberg.
I'm kidding.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Big tech selling off. That's sending the major stock averages lower. NVIDIA looks set to halt a streak of 9 straight weekly gains. Adobe tumbling 13%. They had that weak sales outlook. Volatility, the watchword of the day. Derivatives contracts tied to stocks, the index options and futures maturing. So you have to roll over these existing positions or start new ones. About $5.3 trillion, that's trillion with a T, worth of options set to expire. We had the University of Michigan sentiment survey, closely watched 5 to 10 year median inflation expectation. That stayed steady, 2.9%. That was in line with forecast. The shorter run expectation coming in slightly below the economic median. I'll call that Fed friendly. S&P 500, 28 points lower. That's down 0.6% at 5122. The Dow Jones Industrial Average, 98 points lower. That's down 0.25%. The Nasdaq 100 right now down 161 points, a decline of 0.9%. 2-year yield up 2 basis points, 471. The 10 is 2 basis points higher. That is at 431. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Jen.
Thank you very much, John Tucker. Paul Sweeney is off today. Jen Ryan standing by. I think they do have Shamrock Shake still at McDonald's. I'm not gonna, don't quote me on that, Tucker. But
they
I
must.
think it's possible.
Well, at least for St. Patrick's Day is the 17th on Sunday.
I mean, I feel like that's okay. I mean, do you want to know the calorie count for that, or you're good?
I actually did check the calorie count for the large. It's 800 calories. Could you imagine?
That's a something.
Just one drink.
That is a something.
Breakfast and lunch right there.
Combine that with a Big Mac, large fries.
That's
you're
your food
set
for
for a
day.
week.
Yeah.
Oh, they can have reduced fat ice cream, though, so that's something. But that's only if you can order it, because apparently there was an outage. They experienced a system outage. It appears to have started in the Asia-Pacific region and spread to other markets globally, leaving customers unable to order at its stores. It's huge. So we have to get more on this. The stock is just down by about 0.4%. Michael Halen, Bloomberg Intelligence Senior Restaurant and Food Service Analyst, joins us now. What happened here?
Nice segue, by the way.
Thank you.
That was great.
I mean,
I
I do this for a living, but it's a hit or miss for me. It's 50-50.
Can't all be winners, I guess, but that was a good one. I'm not really sure how many stores in how many countries were affected. So far, from what I could cobble together, it looked like a couple dozen countries, and it wasn't all of the stores in the countries had this digital outage, so people couldn't order and pay with their mobile apps, right? And they had trouble ordering ahead on
I mean, I can make
online.
fun of it, but that happened to Starbucks, I'd freak out. So, it's a fair.
Well, because you're
it's a fair
addicted
thing.
to the caffeine in Starbucks, you're not addicted to the
Right.
Big Mac, right?
Well, think of the people who are addicted to the Big Mac.
It's painful.
Exactly.
It'd be hurt. Yeah. Think of the people who want that $800 calorie Shamrock shake. It'd be a really expensive shake if that was the case. How is McDonald's doing?
So I guess what I was getting at is it's going to be negligible, the impact on their earnings. It'll it'll be, we're talking about like a few basis points maybe impact to the global same-store sales for the quarter. But McDonald's is doing really well overall. Last quarter they started to talk a little bit more about the low-income consumer and how they're kind of pulling back on their spending, visiting less often, ordering more off of the dollar menu and things of that nature. But overall, the company is doing really well. They are having some issues in the Middle East, however.
Yeah, can you talk us through that? It looks like the CFO announced something at a recent conference.
Yeah, and they mentioned that same-store sales for their international and developed markets are going to be lower than expected, lower than consensus, lower than they were last quarter. And so I think most of the street had thought that initial impact of some of the things that happened with their franchisee and perceived support of Israel over Hamas hurt sales in the region. And I think a lot of investors thought that would kind of roll off after fourth quarter. But it looks like it's going to impact their results for longer than expected. I mean, it could last throughout the year. McDonald's does have exposure to Egypt and Jordan, two countries that are geographically very close to the conflict. So that's going to impact their results as well. you know, and it could be a few quarters for this you know, impact to kind of to roll off. What I'm hearing is it is improving. Things are improving, not only with the American chains, but also locally. But it's going to take time.
So I'm looking at the stock. Just this week, in the last 2 days, it's down by about 5%. Do you feel like that's accurately reflected now in the stock price and valuation, or is there just a little bit more downside? Is that ego, or is it actual Middle East issues? Or he's kind of laughing at me, and I don't.
Well, I work for Bloomberg Intelligence. Am I allowed to tell you what's priced in and what's not priced in? I mean, listen, on the valuation, it's interesting. We're in an interesting spot for restaurants right now. So the stocks have done really well over the last like 6 months or so. I think we've passed the toughest year-over-year comparisons in January and February. So the year-over-year compares are getting easier throughout the rest of the year, on one hand. But on the other hand, you have a weakening consumer, especially the low-end, the middle-income consumer, right? And so it's tough to say. I mean, you can make the argument the entire space is overvalued, right? So maybe that 5% correction, maybe that's not enough. It's very difficult to say. Like I said, we're in this point now where it's going to be really, really interesting. And I think what's going to happen is we're going to see a bigger divergence between the winners and the losers. You know, companies that are doing really well, companies like Chipotle and McDonald's that have been able to draw in some of the higher income consumers, I think are going to continue to outperform some of these other chains that haven't been able to do that to the same extent, like a Wendy's or a Cracker Barrel. So it feels like it's getting back to a stock picker's market for restaurant stocks, which is great, which I love. You know, so we'll see. It is a business where you have to compare, I think, you know, these restaurant chains where versus their peers. And McDonald's gets a premium valuation, but it also has outperformed.
You know, I would love to go back to this point you were making about like consumer spending and which chains are getting the wealthier customers. I mean, because we definitely saw a trend of casual dining moving to fast casual moving to quick serve. And so where are we now on that? Is with inflation pressures easing, is that kind of unlocking a little bit?
We're still seeing this K-shaped recovery. We're seeing, you know, that's what we're seeing. So we're seeing the high-end consumers. We think they're going to start spending again this year. Full service, fine dining. They had the toughest comparisons. Last year, fine dining did absolutely terrible. People visited less and they spent less. They bought less expensive wine, things of that nature. Now, with asset prices going up, we think that high-end consumer is going to come back and spend a lot more. So I think we're going to see fine dining recover and probably outperform a lot of the other subsegments of the restaurant industry. And I think casual dining is probably going to get pinched the hardest. You know, it's a similar lower and middle income consumer to fast food, but fast food is cheaper and fast casual is cheaper. So I think people are going to go and spend their money where they think they get better value for that dollar, right? And casual dining, you know, that full service experience, you're going to pay a tip. You're more likely to buy drinks, appetizers, desserts. So the bill ends up being a lot higher than it would at the fast casual.
Yeah, also like fine dining now, forget it. Like regular dining is now fine dining, right?
Exactly.
Like $300 for 3 people.
Can I point out an Achilles heel? I think from the suburban perspective for McDonald's, the drive-in where everybody goes. You don't go you go through your car. I go to my mailbox in my car to get the mail. That's a disaster. You pull up, you order, you pay, and then you go to pick up your food, and consistently they tell you you have to go park and someone will bring your food out to you later. That's not fast food, and it's annoying because
it's too much. They can't do it.
They just can't do it.
Understaffed, and that's
in the restaurant. Yeah.
A lot of the restaurants. So that's such a pet peeve. Every time I go, and I haven't been in a long time, I say to myself, I'm never going back to McDonald's.
And that's why they're pushing you to order ahead. They want you to order ahead, and they have the geofencing, so you can order ahead on your mobile app. Once you pull on the lot, they're alerted that you're on premises. You park in the spot, you hang out, you look at your phone, look at Instagram for a couple minutes, and then they bring out your food.
Yeah, this totally described what Tucker does, for sure. And Instagram, and he's like, I got a few minutes.
Way too many
but before
steps.
we let you go, though, but then to that point, what are their margins like? Because input costs and inflationary costs, and then you have labor costs. And I'm wondering, if they can't really pass it on, what are their margins looking like?
Well, the franchisees are getting squeezed. There's no doubt about it. I mean, the beauty of being a franchisor like McDonald's is their margins are fantastic because, you know, they're really a marketing company, right? Like they're helping their franchisees market the brand and the food. So, yeah, but franchisees are getting squeezed. There's no doubt about it. This year, commodity price increases are going to be less than what we've seen. But chains are very, very wary about raising prices anymore because we've seen traffic decline a lot over the last 3 years, and it's been in response to much, much higher prices.
Michael, great stuff. Really great to have you. Super interesting conversation. Michael Halen, Bloomberg Intelligence Senior Restaurant and Food Service Analyst. But then you would think, Jen, that like the people who don't want to go out to eat anymore or don't want to go to casual, like do they then trade down? And is there a new customer that's going to be coming in on a more consistent basis as things get harder? I don't know.
I don't know. And the thing is, I do always wonder about the low-income consumer because if that spending starts tailing off, what does that say about consumer spending for the rest of the economy?
It's not good.
70% of the economy.
Yeah, there's a really great article on the Bloomberg that talks about how auto debt, for example, and credit card debt has really been rising and that people might be getting paid more, but it's the debt part that is really squeezing everyone. I encourage everyone to read it. It was really eye-opening to me. Anyway, let's go to Michael Barr now for world and national news. Michael Barr.
Thank you very much, Alex. Jen, John, the judge presiding over the Georgia election interference case says he'll allow Fulton County District Attorney Fonnie Willis to remain on the case, but only if she dismisses a member of her team, her ex-boyfriend Nathan Wade. Judge Scott McAfee says Willis and Wade appear to have testified untruthfully about the timing of their relationship. McAfee also blasted Willis for saying in the church speech that questions about the relationship amounted to critics playing the race card. He says it all adds up to a tremendous lapse in judgment. A Michigan jury convicted James Crumbley, father of Oxford High School shooter Ethan Crumbley, guilty on 4 counts of involuntary manslaughter in the shooting. Prosecutors accused James and his wife Jennifer of ignoring warning signs of their son's deteriorating mental health and buying the gun used in the shooting. Oakland County prosecutor Karen McDonald.
This verdict does not bring back their children, but it does mark a moment of accountability and will hopefully be another step to address and end and prevent gun violence.
Crumbley's wife Jennifer was convicted in a separate trial last month. Late-night tornadoes ripped across parts of the Midwest in states like Ohio, Indiana, and Kentucky, leaving a path of destruction and death. There are several dead in Ohio as trees were turned into splinters, power lines were down, and homes and other dwellings destroyed. In Hanover, Indiana, this man lost his home of 25 years as his small subdivision was hit hard by the severe weather.
I heard the noise first, the train, then I just ducked down on the floor, and then I felt all that insulation falling on me, and it was blowing unbelievable.
In golf in day 2 of the Players' Championship, there is a 6-way tie for the lead at 7 under, including Rory McIlroy, who will tee it up later. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the Gel Razor. And today I'm looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurise the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision, that's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the Gel Razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
The S&P 500, 19 points lower. That's down 0.4%, 5130 on the index. The Dow Jones Industrial Average down 61 points. The NASDAQ 100, 126 points lower. That's down 0.7%. 2-year yield up 3 basis points. Right now at 472, and the benchmark, the 10-year, that is up 2 basis points. That's at 431. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jen and Alex.
Where's your assistant? Did she decide she
My
didn't want to help?
assistant. Get over here, assistant. You're not getting paid. You can be like my intern. Do you know how to make coffee? No. I like it with sugar, little milk. You could also, you know what? I could send you out for Shamrock Shakes. How about that?
Ooh,
There's a
there we
McDonald's
go.
across the street. Would you do that?
No.
That's a solid response.
No,
Smart
she's
kid.
a smart kid. She's a very smart kid, and now she's running away from any sort of There we go. Okay.
The apple does not fall far from the
I
tree.
don't run away. I face you head on, John Tucker, every day.
Literally and metaphorically.
Yeah, I'm Alex Steele here. With Jen. Ryan Paul Sweeney is off today. We are Bloomberg Intelligence radio show. We're right here in Midtown Manhattan. You can check us out on YouTube as well. All right, let's get the take on a market here. My daughter's making animal sounds. Sit down. Don't stand on the chair. All right, looking at a market here where we're trading a little bit heavy. Yes, it's options expiration, triple witching, volume super high. But, you know, I'm trying to understand if we're going to be looking for bad news or good news and what the reaction function is for stocks. So Dana Dioria is co-CIO of InvestNet, and she joins us now. Dana, what are we waiting for at this point? Like, do you need to be selling into this? Do you buy whatever dip? What do we do?
Yeah, it's a great question. You know, I think, we've been buying. There's been plenty of buying going on in this market, I think. Actually, I think, you know, what we're seeing now is, of course, the market slowly but surely getting to where it's hard to understand why we maybe didn't start there, right? You know, the market contending with, it's probably not 6 rate cuts. We're past that. Question is it even 3 at this point, all else equal, right? Not knowing what we know now. And, you know, if that's the case, you know, I guess the question becomes, does it finally start hurting some of these growthier stocks where, in spite of the fact they have, you know, longer dated cash flows, we know traditional would say that higher for longer, you know, should be more painful for them. If they're self-funded, they're really not feeling that pain. I think, you know, it's kind of more in small caps is an interesting place to be thinking about. They're more interest rate sensitive. You know, does higher for longer, how does that impact them? But there's pros and cons there. You know, my take is actually to keep tilting a little bit into that space, especially if you can wait it out. They may be interest rate sensitive, but if inflation comes back, you know, small value in particular tends to outperform inflation. So there's push and pull in this market, but I think the overall theme is, wow, maybe we're not going to get these rate cuts we were hoping for.
I mean, can you talk a little bit about your views on the balance of risks for the Fed? I mean, do they have a lot to lose by waiting, a lot to lose by moving too quickly?
I think they have more to lose by moving too quickly. You know, their mandate is employment and inflation. And really, both of those are signaling the same thing, that it's not time to cut, right? So we have PPI coming in a little higher than we wanted, core, you know, inflation a little higher. Obviously, these are not extremes. We're not seeing a bounce back or something in inflation yet, but we are seeing stickiness to inflation. And, you know, the history suggests inflation does kind of come in waves. We've seen a lot of macro analysts talk about that. You know, so the Fed, of course, is well versed in that. So they're probably worried about that. They're also looking at these employment reports. Unemployment ticked up a little bit, but, you know, initial jobless claims look great, right? The employment picture looks pretty sound. So if your mandate is employment inflation, both of those signals are saying, why are we cutting right now? And I will say, look, on the other side, well, one other signal saying why are we cutting, of course, is the stock market itself. It's not like, you know, we're feeling a lot of pain there. We're certainly not. Small, you know, areas of the market, but not the market overall. I will say, you know, if there's, you said pros and cons, right? The other side of it for the Fed, if there is some, and I don't think this is the decisional part, but we do have a federal debt that's climbing dramatically. We do have cost of, you know, maintaining that debt. The higher the interest rates, of course, and the more that debt rolls over, the worse it is. So, you know, to the extent that impacts on the Fed, that is in the mix.
So if we're dealing with all of this, is it a commodity situation that you need to be playing right now? I'm just looking at month to date. The S&P Energy Index is up almost 7%, whereas you have WTI also with a nice move, month to date up a little over 3%. It's a little softer today, but you know, copper at 11-month high. Like if we're in for a period of, yep, we're going to get stickier prices. We're not sure what the reaction function is from the Fed. It's going to push off rate hikes. Just buy the commodity sector.
It's a thought, right? There's definitely a camp who would say yes to that. And especially too, if you think inflation might be stickier, of course, there's a whole, you know, school that says that that's a place to be to tackle inflation. I don't know if I come in really in that camp. Not to say one way or the other. Obviously, demand, there's several variables that are going to impact on that. And energy, of course, very dominant in that sector. But I guess, you know, from the standpoint of just what am I trying to protect against? the commodity sector is pretty volatile. If it's inflation I'm trying to protect against, tips is probably a better place to be if I'm specifically looking there. And if I'm in equities, and as I mentioned, small value in particular, I can go there and I have a reason to productive capacity, right, to earn returns over time there versus maybe just, betting on a commodity, betting on a price increase because of supply demand issues. So my personal preference is more along those lines. It's not to say you shouldn't be in commodities, but I don't put a big stake in the allocation there.
So just one last question for you. Getting into the second half of the year, presidential election campaign coming up, there could be highly partisan activities going on around there. What should equity investors be looking out for?
Yeah, understatement of the year, right? Definitely, we'll see some partisanship. I'm with you 100%. Look, I think there's a lot of academic evidence, a lot of empirical research that says you can draw a good correlation between who's in power, whether it's presidency, Senate, House. All sorts of think of the matrix of which in power for each of those. It's all been looked at. It's really not definitive which configuration is better for markets. Obviously, if it was, you'd have that party really singing those phrases. But so I don't, from that perspective, I don't think there's a lot of information content. But I think you nailed it. It's the volatility. Right. Mm-hmm. It's the fact that the market vol and actually you're seeing VIX, futures in VIX reflect this a bit, that around October, all of a sudden, a spike in volatility is probably coming for the market. So I think you're absolutely right. I think expect kind of bumpiness the election season. And as we all know, too, globally, there's a lot of elections going on this year. So overall, that could be, not just in the S&P 500 and U.S. indexes, but globally as well.
All right, Dana, thanks a lot. Really appreciate it. Dana Dioria, co-CIO of InvestNet, joining us there. But the interesting thing is, if you played volatility or election volatility or geopolitical risk, it hasn't paid off. Like you had a brief momentary thing in 2016 with Brexit. But the hedging window of making money just gets smaller and smaller with these things.
I know. So if that's your move, then you've got to think of another strategy because I'm looking at the VIX right now and it's at a pretty low level.
Yeah, and if anything, everyone's buying calls to play the upside or selling calls, not necessarily hedging their bets when it comes to puts. Looking at a market here that is a little heavy, but off the lows. NASDAQ is down by about 0.5%. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker, the newsroom, with a look at some of the company news. Hold the pickles, hold the lettuce. We can't order, and that's upset us. No, that's actually, I'm sorry, that was the Burger King jingle. I'm talking about McDonald's here, so my mistake.
That was tough, man.
McDonald's has been hit by a system-wide outage that appears to have started in the Asia-Pacific region. It spread to other markets globally, and that left customers for a while unable to order at its stores through electronic platforms. The issue, caused by a problem at the fast food giant's computer system, rippled from Japan to Australia, New Zealand, several European countries, some restaurants unable to take orders or serve food. Now, we're being told, this is important, issues in Ireland have now been resolved. So that's good, because St. Patrick's Day is Sunday, and they'll be able to order the Shamrock Shakes in Ireland.
This is what it all comes down to, basically.
Essentially, yeah. We focus on the real important part of the story. Cable and satellite TV providers will need to make sure bills and ads clearly display a total price for video subscribers, including extra fees that can amount to hundreds of dollars a year. This is under a rule just adopted by the Federal Communications Commission. The FCC rule would require cable and satellite providers to clearly state the total cost. And Target's new self-checkout policy, that is going to start this Sunday at stores nationwide. You'll need to have 10 items or less, 10 items or fewer, I think, to use the express self-checkout registers. At the same time, Target opening more traditional checkouts where employees can ring up customers with larger orders. The signs always say 10 items or less, but that's grammatically incorrect, right? It's 10 or fewer. We'll have to correct that. Anyway, that's...
Okay, thank you.
That's your grammar report. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. You're listening to Bloomberg Intelligence Radio. We are live from the Interactive Broker Studio right here in Midtown Manhattan. You can catch us on radio and also streaming on YouTube, where we cover all the top stories with our Bloomberg Intelligence analysts. They cover over 2,000 companies in 130 industries. Paul Sweeney is out today. Jen Ryan helping me for the week. Let's get you over now to world and national news with Michael Barr.
Thank you very much, Alex. Jen, John, the district attorney can stay, but her ex-boyfriend has got to go. That's the ruling from Fulton County, Georgia Judge Scott McAfee in the election interference case against former President Donald Trump. The judge says DA Fani Willis's relationship with lead prosecutor Nathan Wade was improper, but the appearance of a conflict of interest could be resolved if Wade steps aside. We got reaction from former Watergate Special Prosecutor Nick Ackerman.
In any case like this, where a prosecutorial misconduct is alleged, normally there has to be some showing that in some way this undermined the defendant's right to a fair trial. Evidence was withheld, it was concealed, discovery wasn't done properly. None of that happened here. So I don't see how, under any circumstance, the defendants could meet their burden here.
Former Watergate prosecutor Nick Ackerman was a guest on Bloomberg Surveillance. Deadly tornadoes swept across the nation's heartland overnight, and as the sun rises, the damage is becoming clear to stunned communities. The reported tornadoes killed at least 3 people in Ohio and injured dozens of residents in Indiana. In Randolph County, Indiana, Governor Eric Holcomb said state agencies are on the ground helping with recovery efforts.
As you go from kind of rescuing to responding to restoring power to then rebuilding, we'll all take a sense of pride in helping you every step along the way.
Governor Holcomb says the only thing more powerful than the storm's wrath is the Hoosier spirit, and that spirit of teamwork. Russia has begun 3 days of voting in a presidential election that is all but certain to extend President Vladimir Putin's rule by 6 more years after he stifled dissent. In golf at the Players' Championship, there is a big traffic jam at the top of the leaderboard, a 7-way tie at 7 under. Rory McIlroy and Xander Schauffele are there, and they will tee it up this afternoon. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Jen, John.
All right, Michael Barr, thank you very much. So here is a piece on the terminal that Jen pointed out to me. I'm going to read the headline and let her take it away here. Heiress from Austria to let 50 strangers decide the fate of her portion. here's for fortune. Her portion of her fortune. What?
Her fortune.
Her fortune. What?
This story, you're right, is absolutely fascinating. So it looks at a woman called Marlene Engelhorn, and she grew up in a very wealthy family. They had their money from the founder of the German chemical giant BASF. And so that wealth never really sat well with her as she was growing up, according to this story. But things took an interesting turn in 2022. Her late billionaire grandmother left her more than 25 million euros. So now what's she going to do? She was never really in favor of having all this wealth concentrated in her family. So she has taken this decision that she's going to appoint 50 strangers, and they are going to decide what she should do with that money.
Oh my goodness. And do we know who these people are, or they're not chosen yet? I guess it was an invitation, right? Was it sent out like 10,000 invitations randomly over all of Austria above the age of 16?
No, there was a lot more order to it than that. What she did was work with the research group. They were called Foresight. And so they did it very sort of scientifically. Looked at demographics, race, age, socioeconomic background. And so you've got these 50 people, and they're all going to meet for the first time this weekend at a hotel in Salzburg to have their discussions.
Wow.
I know.
That is so cool. You know, I'll take $25 million and just, like, I'll try that out and see and get back to her. That sounds good, right?
Yeah. That's a good plan. You'd be very good at that, I feel.
Could they just decide to give it to themselves?
That is an excellent question.
But she can say no, right? I mean, she has ultimate power.
Who knows?
Yeah, she's going to take their advice. I can't imagine her saying no after going to all that trouble.
Man, okay, we're definitely going to be following this story because this feels really huge. More Bloomberg Intelligence Radio coming up next. Happy Friday. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. I'm Alex Steele. It's a Bloomberg Intelligence radio show along with Jen Ryan. Paul Sweeney is off today. We are discussing the merits of a Shamrock Shake from McDonald's, and I feel like we're going to be discussing this over the next hour. Maybe we just need to go out and have them and then stop talking about it. We also have a lot more coming up in this hour. Adobe, the worst performing stock on the S&P, will break into what was so bad about their earnings. We're also talking about munis. It is my quest to find engagement and interest in munis, and we will do that later on in the hour with Joe Misek. In the meantime, though, let's get to John Tucker for a business flash.
All right, this Bloomberg Business Flash being brought to you by Interactive Brokers. Interactive Brokers charges U.S. dollar margin loan rates from 5.83% to 6.83%. Rates subject to change. Learn more at ibkr.com/compare. Major stock averages lower, but off the worst levels of the session. What's shaping up to be a volatile day for markets? Adobe, the worst performing stock of the S&P 500 and the NASDAQ after that disappointing earnings report. Adobe shares right now down 13.5%. The losses in the markets would be worse if it weren't for shares of NVIDIA. Those shares up 1.5%. The chipmaker does have its GTC Developers event that starts on Monday. Meantime, Nadia Lovell, equity strategist, UBS, sees a bull market rally continuing for stocks.
Yeah, we might see some pullbacks here and there. We think that that's healthy. We think that dips are likely to be more like small puddles, not, broad craters, and we would be buyers of dips. And we think that there's solid underpinnings here for this bull market to be sustained.
University of Michigan's National Consumer Sentiment Index showing little change in early March. Inflation remains an issue too, but not as pressing as before. The S&P 500, 20 points lower. That's down 0.4%, 5130 on the index. Dow Jones Industrial Average down 53 points. The NASDAQ 100, 148 points lower. That's down 0.8%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. I should point out that Abigail Doolittle's dress is the color of a Shamrock Shake, if I'm not mistaken.
It's a lovely color, but that is worrying in terms of consuming food.
I guess, I don't know if I want to eat something that looks that green, but like I drink shakes, like I drink, vegetable juice, like.
Oh, I can see you. You're drinking like.
Right,
And
that's
the
not
same
like a
thing,
syrup.
I won't do any like blue, like the Shark Blue Ices or Slurpees. I won't do blue M&Ms. Green M&Ms I'll do. I think the Shamrock Shake I would actually do. The small, 500 calories. Kind of a nice little tribute to St.
I in
Patty's
no
Day.
way think that that would actually happen. I'm just putting that out there. You're too healthy. You don't even look at sugar.
No, well, actually, yeah, that's true. Right now, I'm trying not to eat sugar. I recently fell off the bandwagon, but I actually junk food. That's my secret thing.
Wow, I learned so much.
I know. So when I'm not eating sugar, it's potato chips, ridiculous amounts of cheese, crackers. When I'm eating sugar, it would be a Shamrock Shake.
I know. I still don't buy it. But anyway, but I will trust you that you know your own food. I'm Alex Steele, Jim Ryan, in for Paul Sweeney. Well, apparently we got to go to McDonald's after this. I think is the takeaway.
Team outing.
Team outing on John Tucker. All right, let's get to the market here. As John was saying, it's trading a little heavy. Citi estimating that we're going to have $4.6 trillion of open interest across equities that are going to roll off today. 3.2 trillion in indices. You got 682 billion of ETFs. 652 billion of single stock options. What does this all mean? Abigail knows. Abigail Doodle of Bloomberg News. So what does that actually mean?
Well, that's $1.1 trillion more than I had heard just 2 hours ago.
That was what he said, yeah, but it could change.
No, but I mean, it's, what it really promises is the volatility that we're seeing that John Tucker was just talking about and we were talking about last hour. The S&P 500 is at the lows, down closer to, I think it was 0.6%. The NASDAQ 100 had been down more than 1%. Now the S&P 500 down 0.4%, and the NASDAQ 100 down about 0.75%. Expect to see these fluctuations, this volatility throughout the day. It also typically means volume should be more than double what they would usually be. And then the biggest point is the idea that it could be some sort of a reset. Again, I use that March 2020 as an example into that options expiration that week, down 15%. The following Monday, down another 2 or 3%. And then after that, that was basically the bottom of the pandemic sell-off and the base of the bull market that we've been in for quite some time.
Can you talk about what sectors you're watching here?
Sector-wise, I am watching the information technology sector, still the worst sector on the day. Let me just confirm that. Yes, it is, down 1.1%. This has a lot to do with Adobe. What's so interesting about Adobe, so the stock down, last time I looked, down 13 or 14%. It was the worst day since September of 2022. They put up a decent quarter, but the guide's a little bit light. And it's not even hugely light, but they are, of course, one of the premier software companies for creative people. So there have been a lot of fears about how would AI potentially supplant their efforts. So for some of their popular products, apparently they have added on some AI tools. So the idea that they weren't able to meet the consensus forecast for this quarter relative to sales with those AI tools is apparently what's a little bit worrisome. The CEO, on the other hand, saying expectations around guidance were just a little bit too high.
I just want to point out here, Reckitt Benckiser is a UK stock. It's down as much as 18%, the most intraday since September of 2001. Apparently, a U.S. jury ordered the Consumer Goods Company unit to pay out $60 million to an Illinois woman. This is over a baby formula lawsuit, and they're ordered to compensate the mother of a premature baby who died from an intestinal disease after being fed Enfamil formula, which if you've had a baby, like that's formula that everyone is really familiar with and that you definitely use. So just to point that out. To that point, what are the options like on individual names? I know you were talking about some of them, but like, are we seeing a lot of action? Like, Citi was pointing out things like FedEx, IBM, Lockheed Martin.
Well, lucky enough, so I don't usually use the OMON function on the Bloomberg terminal, which is the way that you do track the options. But what I am doing is looking at an email that Steve Sosnick of Interactive Broker sent me. And so he's saying, and this was just minutes ago, we've already seen over 60,000 of the expiring 900 calls trade. Not surprisingly, he's saying, therefore, the stock bounced. And then when NVIDIA bounced, so did the whole market. Now, something else that he wrote to me in his email is what we were talking about last hour and what I was just saying, that sometimes these big options expirations can be reset points when the volatility increases. The volatility in NVIDIA, he's saying, is increasing. So that is one reason to think that there could be a reset. It's supported by the technicals of the chart, possibly a diamond top. If it takes out its last low, I think we can see some real selling pressure. And why would that be? Well, into the last peak just last week, the stock up about 100%. So too far, too fast, no matter how great it is.
So, but if we do see a reset going into next week, the whole story next week is going to be about the Fed.
It's going to be the Fed. Well, the Fed would probably, that's a great point, John, because the Fed would be the confirmation of the potential reset. Because the reset's not going to be an overnight reset or a reset today or even Monday. It will be over time. So it would probably be the Fed in conjunction with all of these expirations that could really create the Fed. This could be the technical piece of the reset, whereas the Fed would provide potentially the fundamental. If that happens, it suggests strongly that something new from a commentary standpoint would come out of that meeting.
All right, Abigail, thanks a lot. Really appreciate it. I know busy day for you. Thank you for joining us. All right, let's get to Adobe, worst performing stock on the S&P, down almost 14%. Weak sales outlook for the current quarter. That's the key, and it's all about worries now about AI startups being a big threat to the company. So let's get more here with Brody Ford. He joins us. He covers tech for Bloomberg. So what happened?
What happened is last year, if you asked investors who's going to benefit from AI in 2024, they'd say Microsoft and Adobe. But after last night, it might be just Microsoft for now, right? Because Adobe has invested massively in new AI features, trying to improve a lot of processes in Photoshop, Illustrator, other programs. But we're not seeing a revenue uplift yet, right? Investors expected that these new features would drive a lot more financials in the new year, and we're just not seeing that yet, and they are not keen to wait at this point.
I mean, was that reasonable for investors to think that the revenues would be coming in at this point? Because I feel like they've just developed these new products, give them a minute.
Yeah, I mean, I think management's been pretty consistent in saying right now we're pricing for adoption. We're trying to just get more users. But I just think it's not quick enough for investors, especially when there's this sense that many other AI startups out there are not moving so conservatively, right? They're going to create tools like we all saw OpenAI's new Sora, which allows you to generate video, right? Something like that gave investors a lot of anxiety because they said, whoa, are people even going to need to pay for Adobe's tools if this becomes mainstream? Right. So that's where a lot of this anxiety is stemming from.
So also, don't they need people like me who's not use it for free and come in and pay for stuff? How are they going to, aside from the AI conversation, how are they going to make me, who wouldn't know Adobe if it hit me in the face, come in and start to pay for some things?
Yeah, so I mean, their primary user base is the kind of creators, graphic designers,
the fancy
movie
people.
Studios, right? They are increasingly trying to break into people like you and me who might need to every so often, edit the margins on a photo or recolor something. And so they've invested.
Help Kate Middleton. I mean, it's a whole thing.
Right, exactly. If they had a more unscrupulous marketing department, I'm sure they would have leaned into the whole Kate Middleton.
Oh my gosh, don't do what she did. Use our services.
Yeah, if she had Adobe Firefly, that never would have happened.
That's pretty funny.
Yeah, so yes, I mean, they have invested more in trying to get average users using their stuff. That was a big cornerstone. I don't know if you all remember, they tried to buy this company Figma for $20 billion. That was part of that planned acquisition that, hey, this company has been good at putting these complicated tools on the web, making it simple, making it so that average people can use them. We've had trouble with that. Let's just buy them.
That's an interesting idea. But I guess I want to get your take on the bigger picture here. So in the long term, AI, do we really need Adobe software? I mean, is this the tale of a buggy whip manufacturer grasping at the last straw when the whole technology has moved on?
Yeah, and there was this rare candid moment on an earnings call last night where they kind of had this argument a little bit, right? Some of these Wall Street analysts said, we understand that in the near term, people will need Adobe's tools to edit the video, edit the photo. In the long term, are you going to get displaced entirely? Management pretty much said that you will always need something to, you're not going to generate a whole video just with a prompt and publish out there. I think the quote the CEO used was, the next Oppenheimer is not going to be created with a prompt. But it's an open question, right? As the decades go on, the current format of Adobe's tools, which is, these kind of heavyweight applications on the desktop, think about like Photoshop, video editing, picture editing. Will these formats really still exist once you can generate so much more media with a prompt?
But, you know, I have two schools of thought on that. Like, one, people who want to do that, they want to do that.
Yeah.
Like, they're creative people that enjoy it. They don't want to just put in the word flower and, like, get a picture, right? However, do they have tools where you can put in the word flower and create a picture? Like, are they working towards that?
Oh, yeah. I mean,
Okay,
no,
so
they're
in it. Like, they're in it.
Yeah. I mean, Adobe has pretty much spent the entire last year working quickly, because other AI startups did this first, to make these kind of tools where you can type in, you know, like 4 journalists sitting around a radio booth, and it generates the image pretty well, right? And to your
No, don't do that, guys. No. You need us because we are unique and awesome. Okay, go ahead, sorry.
No, to your point, do creatives like it? It gives them some anxiety, no doubt, but like, I mean, they need to get paid, right? And at the end of the day, if the bosses are saying that, hey, this is a pretty good tool, we're gonna be able to create things faster, the incentives are all there. I mean, I don't think the idea that people are anxious because AI might replace their jobs could reduce the adoption of it. I don't think that will be really a prohibitor here.
I mean, that's so interesting, though, because ever since this generative AI mania came about, the whole question is, what's this going to do to jobs? And a lot of the response has always been, it'll always be people working in conjunction with AI. But the thing that makes me think about your Oppenheimer comment that was made on the call, I think that's a very telling comment, because that Academy Award went to the one person, not the one person in Hollywood, a prominent person in Hollywood who champions the old school way of doing things, shooting things just on film. And so that kind of leads me down this path of thinking, yeah, the Adobe software might stick around for a while, but it might just become very niche or something for a very specified sort of area of use, whereas the rest of the world is just going to move on with doing things with a couple of prompts.
Totally. And the big question is, like, will companies reinvest, right? Because these are labor-saving technologies. Will it be that, hey, I'm able to do more with each person so we can expand the scope of what we do? Or are we going to do what we currently do work-wise with less people and just save a bunch of money and employ less? And I think we're deluding ourselves if we don't think that companies are just going to cut labor. At least some of them will.
Yeah.
What else are you looking at? Like, what else is striking is floating your boat right now?
I mean, I think a really big one is how soon we are able just to generate these videos with prompts, right? I mean, this demo we saw from OpenAI was such a kind of extreme example of this technology. And the big question is this really ready for prime time, or is this one of these demos that you show that isn't actually going to be in our hands for a couple of years?
Yeah, I guess that's always the question, though. And it's like, we're believing the hype, or we're lapping up the hype, any example of how cool this could possibly be. But this is the question for all companies. You know, you've got to start putting real money behind it. And like sometimes it just like doesn't work very well, or there's tweaks in the machine that makes you think, like, I don't like this response.
It looks, well, I mean, and I'm sure you all saw the controversy of Google's equivalent of the image generation. It had a lot of backlash in recent weeks because it would, you know, if you typed in a certain historical element, you know, some of these tools are made to, you know, emphasize diversity, and some folks, there was some backlash to that in historical context, or maybe it wouldn't be accurate. And so there is a lot of people very closely scrutinizing the outputs of these machines, right? I mean, there's no precise way to make everybody happy with these.
Yeah, I guess a lot of programming needs to keep happening, and it's a question of whether the money will still be there from companies to pay for it.
Well, Brody, thanks a lot. You were awesome.
Thank
Love
you.
having you on. Your depth of knowledge is great. Brody Ford coming in there, Bloomberg Tech. And you're looking at Adobe. Where'd it go? I had it, and it went away. It's down. What, 17%?
It's real down.
Yeah, it's real down. Around 17%.
Yeah. 14%.
14, thank you. Had a buyback, though, as well. It's like, hey, guys, stick around, stick around. We know we're not delivering what you want right now, but please stick around for that. I mean, I do think your point is taken, Jen, that, like, everyone seems to say you will use AI, but you need humans to help it. It's not maybe going to be as binary as maybe we thought a couple years ago.
Yeah, you need humans, but maybe to Brody's point, you don't need all those humans,
Right.
just a couple of humans.
But which is why you need people like us to want to diversify into, you know, Photoshop to do that. Like my dad does that. Like he takes photographs, he likes it, and then he tools around in it. Like you need those people to kind of pay for that stuff that is irrespective of AI. But is that really going to move the needle then for a company like Adobe? All right, anyway, we have much more coming up. Munis is up next. It is my goal in life to be into munis. Joe Mysick is going to explain it to me, and I'm looking forward to it. Stock still trading a little heavy on high volume here on this Friday. We made it. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This is Bloomberg Business Flash. And we are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Right now, stocks are lower. They paired some of the earlier losses. 6 of the 11 major industry groups in the S&P 500 are down. Information technology, the biggest drag right now, and that's where you find shares of Adobe tumbling 14% on that weak sales outlook. Keeping a lid on the losses. Shares of NVIDIA, they're up 1.5%. And, of course, volatility, the word of the day, derivatives contracts tied to stocks, the index options and futures, they're maturing. You have to roll over existing positions or start new ones. This adds up to about $5.3 trillion worth of options that are expiring. In the University of Michigan Sentiment Survey today, the closely watched 5-10-year median inflation expectation staying steady at 2.9%. That was in line with forecasts. The short-run expectations came in slightly below the economic median. Right now, the S&P 500, 27 points lower. That's down 0.5%. That's 51.23 on the index. The Dow Jones Industrial Average, 112 points lower. The NASDAQ 100 down 168 points, down about 0.9%. Two-year yield up 2 basis points, 471, and the 10-year is up 1 basis point. That is at 430. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus with Joe Mysak.
Focus on Munis is brought to you by Build America Mutual, insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM insured bonds.
BAM.
Is that better?
BAM.
BAM?
BAM.
Was my BAM enthusiastic enough?
It's good.
BAM.
I'm working
You'll
on
get
it.
it.
Okay, all right. I mean, it's better than my normal BAM. Okay, so let's talk about the pace and issuance. Apparently, Joe Mysak, it is a seller's market. Who is selling? What kind of numbers are we seeing here?
Everyone is selling.
Everyone.
Everything. We're selling out right to the bare walls here. No, we're at about $82 billion in the municipal market in issuance this year, which is up 30% over the same period last year. And we have 10-year yields at about 243, which are, it's very advantageous for issuers right now. So you have schools coming and you're having, housing deals coming. Harvard is coming. Princeton University sold bonds. You have a lot, the people just across the board. The only area that I haven't seen is really the high yield area, the kind of crazy bonds, the things for recycling mills,
Crazy
et cetera.
bonds.
Yeah, crazy
Brought
bonds.
to you by BAM.
Yeah. No, they don't. See, they don't insure those. That's the wonder of bond insurance. But we can talk about that at another time.
So this mania, everyone
Mania.
except me
Muni
and Alex
mania.
and John are issuing bonds, it would seem. But would they not prefer to wait until the Fed cuts rates? Or could they come back again and issue more if we get the Fed rate cut?
Very interesting that you bring this up, because municipalities are relatively, they don't really care about where rates are. It's very rare for a municipality to put off a bond sale because they fear that interest rates are high or too high. They borrow when they need to. They just, that's, here, we need the money, good time to go. Every once in a while, you'll see a refinancing if rates are high. A refinancing might be delayed or put off. But, last year, so many of them didn't come to market. And so you have a little, it kind of the pendulum, right? So this year you're going to see more municipalities and states sell bonds.
Joe, is there a macro signal from that, though? If we're seeing a lot of issuance come on, if they're not necessarily sensitive to rates, is there another signal we learn from that? Like they're doing lots of stuff, or they're broke and need a lot of money?
We're seeing stuff. They're building new stuff. America, you're getting new stuff. They're building schools and roads. I tell you, this year, for example, Texas municipal utility districts and the Texas school districts have been very active in the market, and that's because Texas has seen so much population growth. So people are demanding roads, highways, sewers, sidewalks, schools, big schools. So we're seeing borrowing for new stuff. It's not just refinancing. A couple of years ago, I remember, some congressmen were saying, oh, these municipalities, they're just refinancing, they're just churning. No, not true. But this year we're seeing a lot of borrowing for new stuff.
Is that a Biden thing, the Inflation Reduction Act, or is that some other impetus there?
No, you're seeing, there's some of that. You're seeing some of the infrastructure money come on, but it's just, again, it's just demand, so to speak.
Mm-hmm.
So in Texas, you have demand for new schools, demand for housing.
Oh, well, let's talk about that, because apparently the Colorado School of Mines is turning to the muni market for the second time in 6 months to address a housing shortage. So tell us about some of the issuers.
Well, here you have a situation where the real estate around where the Colorado School of Mines is, which is about 15 miles outside of Denver, is very expensive. So the real estate's very expensive, and prices on the apartments are going higher, rents are going up. Everyone wants to move to Denver. So the school takes it on itself. We're going to build apartments, and that's what they're doing here. And we're seeing, not only in Colorado School of Mines, but various universities, because there are lots of schools that are very popular. I mean, I know we've taken a look recently in Bloomberg at the sort of small liberal arts colleges that have experienced declines in enrollment, but not all schools are like that. The super popular schools, enrollment's right there, and they're finding that it pays them to build more apartments, and not only for the students actually, but also for faculty.
But they're building the apartments on land that's very, very pricey. So that is not cheap, I would guess. I mean, is there a trick that they use to get around that?
No, you get
raising tuition.
Right.
There it is.
Well, it's tax-exempt bonding, which is less expensive than you'd get in the corporate market. So you do have that. But yeah, it's one of those things where I don't want to say the popular schools. They have almost inelastic demand. Well, it's almost inelastic supply. It's like we have to do this.
Speaking about supply, apparently there was a California ballot measure to authorize a marquee aspect of Governor Gavin Newsom's plan to reduce homelessness is actually on track to pass. What does this mean then for Proposition 1, I think? What does this wind up meaning for issuance, and what are they going to do with it?
Proposition 1. Indeed, you are correct.
Yay.
It's
Bam.
This is it's a $6.4 billion bond program. Now, are they going to come in and sell all the bonds at once? No. But, so overall, it doesn't have, that big an impact on the supply picture. But this is part of Newsom's plan to alleviate homelessness in the state. And it really has a couple of different aspects to it. One, of course, is building more housing. But another is committing people who can't live on their own. It's a very, I want to say, controversial with some people, but this seems to be the fact. There are people who cannot live on their own, who need supervision, who need assistance, who need help, and we've got to, if you want to alleviate the homeless crisis, you have to do that. So
hey, can I ask you something really controversial, near and dear to my heart? Congestion.
Let's go.
Congestion pricing.
Congestion pricing.
Heading for New York City.
You're going to pay.
Despite the court challenges.
No,
yeah,
we're driving to the office.
So how does that work? The MTA is trying to raise bonds, the money from which the sale of will go to upgrade the subways. Do I have that right?
Show me a revenue stream, and I'll show you a bond issue.
Okay, but at the same time, they say this is to reduce congestion. So the overall goal, the stated goal, is to reduce congestion, to reduce the revenue that you get from the number of vehicles entering Midtown Manhattan. Does that make any sense?
So
Just say no.
How do you really
think
feel?
about tobacco bonds.
Well, no, but yes,
Similar-
it makes
it's
sense,
similar.
right? Because then they're trying to reduce. They're trying to get the money to then just back a bond.
Okay, my
they don't
point
actually
is,
care about the cars.
this has nothing to do with reducing congestion.
Right.
Well, no, sure it does. They want to reduce congestion. What they want to do is make it, okay, in the big picture here, let's turn driving into the city into an abomination so that more people take public transportation. So not only do you get the revenue from the cars that are driving in, but you get more people on public transportation paying for it.
I see.
And so it's a double barreled.
More investment for public transport.
John
Yeah.
Tucker's super excited about it.
Doesn't
yeah.
seem
Bam.
that way.
Hey, Joe, thanks a lot. I really appreciated this segment. Thank you so much. That's it.
That's it?
You're out of here. Joe Meisick joins us from Bloomberg News. I followed that whole Muni segment. This feels like a big moment for me. Let's go to Michael Barr now with world and national news.
Thank you very much, Alex. Jen, John, in Georgia, the judge in the Fonnie Willis case has ruled that the Fulton County District Attorney can remain on the Donald Trump case, but she must remove Special Prosecutor Nathan Wade to do so. Fulton County Superior Court Judge Scott McAfee ruled that while Willis did not benefit from her relationship with Wade, there instead remains an appearance of impropriety. Former Georgia prosecutor Chris Timmons.
I think it's a no-brainer. I think Nathan Wade, resigns. I think he files some sort of document that says that in the best interest of the case, he's not moving forward with the case. He's gonna step down.
Former prosecutor Chris Timmons spoke to ABC. Severe storms with suspected tornadoes have damaged homes and businesses and killed at least 3 people in the central U.S. Officials scrambled this morning to assess the extent of the destruction with power out. The 3 reported deaths came in Logan County, Ohio. Authorities are using cadaver dogs to search for any more bodies. Thursday night storms also left trails of destruction in Kentucky, Arkansas, and Indiana. Officials say about 40 people were injured by a suspected tornado in Winchester, Indiana. In Randolph County, Indiana, Governor Eric Holcomb told residents the entire state is by their side.
I just applaud you for how quickly you've turned to address nature's wrath. And I think the only thing more powerful than that wrath is our Hoosier spirit and that spirit of teamwork.
Officials say a tornado in Kentucky's Trimble County damaged many structures. In golf at the Players' Championship during round 2, Matt Fitzpatrick now leads through 11 holes at 9 under. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash. Still have red on the screen. Stocks lower as big tech sells off. Pile of options expiring today, threatening to trigger some sudden price swings as well. Look for that. Trading volume about 40% above the 30-day average. Adobe tumbling on weak sales outlook. And NVIDIA, on the other hand, that's heading toward its 10th straight weekly advance. Shares of NVIDIA right now up 1.1%. Treasury 10-year yields topping 4.3%, extending this week's increase to almost 25 basis points. Well, despite hotter than expected inflation data that we saw this week, John Stolfus said Oppenheimer sees a positive backdrop for risk assets.
We're headed in the right direction from what we can tell, and you've got just extraordinary times when it comes to innovation. The resilience that's seen by business in the latest earnings season for the S&P 500, with earnings up close just under 8%.
Well, the S&P 500 is 28 points lower. That's down about 0.5%. 51.22 on the index. Dow Jones Industrial Average 115 points lower. That's down 0.3%. We're at 38,789 on the index. And right now the NASDAQ 100 is 185 points lower, down 1%, 17,828. 2-year yield, 2 basis points higher. That's at 471. Again, the 10-year, 1 basis point higher. That's at 430. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Jen.
Thank you so much, John Tucker. Your assistant is no longer here because
I just heard her knocking on the window.
I have outsourced my childcare to David Weston
for this hour. Only the best for you.
So I probably owe him a beer. I'm Alex Steele here with Jen Ryan. Paul Sweeney is off today. You're listening to Bloomberg Intelligence, where we get you all the top analysts analysis from our analysts worldwide. We cover 2,000 companies in 130 industries. I want to now turn to some EV news. The Chinese government has quietly asked EV makers to sharply increase their purchases from local auto chip makers. They want to reduce their reliance on Western imports. So, sound familiar? Let's go to Craig Trudell, Bloomberg Global Autos editor, is standing by for us with the story. I thought that they were doing well on their own. Like, what's going on here with the chip makers and EVs in China?
Yeah, I think it's a really interesting story because, in sort of broad strokes, China is doing a great job with its auto industry or its EV industry in particular is sort of the envy of the world at the moment, which is something that, we've been writing a lot about for months on end. But when we think about the chip sector, it's a different story. And, in part that has to do with the fact that much of the world, has a sort of vested interest in China not being able to sort of set up its own chip industry, or at least, its ability to make the most advanced chips. And so this is a move that makes a lot of sense, just, from the outside looking in. From my vantage point in London, you have an industry in cars that buys a lot of chips, that is really far along in terms of building a successful EV industry. If you can sort of turn those companies into players that are really invested in China, sort of coming along from a semiconductor perspective, it's a potential big boost to the chip companies that are trying to catch up with the rest of the world.
What does the EV industry make of this? I mean, if you're running an EV shop over there, are you happy that somebody's decided now what kind of chips you have to use? Do you like these chips?
I think it'll be an interesting, interesting thing to sort of, see this play out, in the sense that, one of the reasons that BYD was so successful during the pandemic was it was actually kind of already in control of its own destiny. It was making some of its own chips. It was even more sort of vertically integrated, the jargon in the industry than Tesla, which, Elon Musk really sort of prides Tesla in, controlling its own destiny and having its own sort of in-house supply chain. I can remember, a tweet from years ago where he sort of proudly shared this picture of tons of rows and rows of seats, which was just, a big surprise because that's, something that the rest of the world absolutely outsources to suppliers. And so the fact that BYD and Tesla, were sort of, more in control of their supply chain and actually had some capabilities from a chip perspective meant that they were better able to weather these issues with the chip shortage. And it's going to be interesting, whether or not BYD kind of essentially responds to the ministry with, look, we're already making our own chips, thank you very much. So, this story out of China, we don't have a whole lot of sort of reaction on the part of the industry, but that's absolutely, something to watch in the months to come.
How would you rate the EV industry right now?
I mean, it's fascinating because the extent to which I would say BYD and Tesla in particular have just jumped out to this incredible lead, and there does not seem to be a sort of credible effort on the part of other OEMs to really catch up. I think it's really sort of a two-horse race with everybody else well behind. And the fact that BYD just recently has been, dropping the price of its cheapest model to well below the equivalent of $10,000, this speaks to the amount of price competition in that market. I think as competitive as the Chinese companies are on EVs, you do hear a sort of counter argument, and Mary Barra has made this counter argument to us at Bloomberg Television very recently, that pricing is not sustainable, that this can't be kept up. And there is some fodder for that argument when you look at the way some of these companies have been performing financially. NIO comes to mind in particular. They just lost almost $3 billion last year. And so, there are a lot of companies that are not profitable and are in fact far from profitable. And yet, time and again, you see whether it's the local governments or foreign investors, in the case of NIO, which has received an investment from Middle Eastern investors recently, that are very willing to sort of act as a safety net for these companies as they try to take on the rest of the world.
How much this new policy that China's got, how much of it is offense and how much of it is defense? How much of it is rescue for or propping up an industry that it wants to promote? And how much of it is trying to take a dig into a U.S. competitor?
Yeah, I mean, it's really, that's a great question. I think, this could on the margins have some sort of negative effect, for EV chip suppliers, companies like NVIDIA and NXP. That absolutely is I think Renesas as well, a Japanese company, is a big automotive chip supplier. That being said, I do think it's very much also, from a defensive, perspective, in that, as we mentioned sort of off the top, the fact that the advanced sort of chips in particular, the fact that, a lot of that technology is controlled by just a few companies, and companies that tend to be more so aligned, with the U.S. or with, the West in general, has put China in a very precarious position. And they do feel that this is a threat, and it's part of what, sort of makes the politics around Taiwan, so fraught.
Really interesting, Craig. Love talking to you. Thank you so much, Craig Trudell, Bloomberg Global Autos editor, joining us there. And it's interesting, I wonder when we're going to start to see a flood of Chinese EVs kind of enter the U.S. market. I mean, it's in Europe right now, and that's why there's a pushback on that. But when we really get that surge, does that actually spur the demand we've been waiting? If you can get an EV for $18,000, $20,000, or are we waiting for the American automakers to be able to make an $18,000, $20,000 EV?
I know we've had so many guests on this week talking about this, and it's like there's just a couple of hurdles for the American consumer. And it's not just the price, it's the range anxiety. Sure. And then it's also stuff about like consumers being squeezed on inflation. So it's like, is this where they're going to make their big play? Their big splash is going to be on an EV. I don't know.
Yeah, and at the end of the day, I mean, are these companies basically going to be software companies that you have a car, but the real innovation is going to come from software updates? And then what does that kind of environment look like? Like, can Ford be that? Can GM be that? I don't know.
It's like selling razors and then the razor blades.
Yeah, well, yeah, fair enough. All right, we are looking at a market here that is still trading a little heavy. The Nasdaq is now up by a full 1 percentage point. The S&P off by 0.6%. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company news we're following. Let's start off with Goldman Sachs. They bumped President and Chief Operating Officer John Waldron's pay package 28% to $30 million. This for his work in a year when earnings slumped. His pay jump was greater than the one granted to the CEO, David Solomon. He received a 24% bump to $31 million. The firm did begin the year by embarking on one of the biggest rounds of job cuts ever, eliminating about 3,200 jobs. The bank was hurt by muted capital markets activity that kept a lid on fees and magnified losses on real estate investments, as well as its failing consumer strategy. Health insurers and the U.S. government officials are expected to meet next week to hash out differences over how to assist cash-strapped medical practices. It was all the result of a cyber attack last month. That continues to hold up billions of dollars in payments. The administration has been dialing up pressure on insurance companies broadly to advance payments to doctors and clinics who say the February 21st hack of United Health Group, their subsidiary Change Healthcare, has roiled their finances. Insurers are concerned the push for payments doesn't fully take into account steps the companies have already taken to try to get business back to normal. And Kathy Wood, a lot of things to a lot of people in St. Petersburg, Florida. Her ARC Investment Management is the lead tenant on a state-of-the-art startup incubator. She's partnered with the local school district on science and technology curriculums, and she's become a recognizable face in a town without much of a Wall Street presence. The rocky performance of her flagship fund doesn't really seem to matter. Unlike Ken Griffin, Jeff Bezos, Steve Ross, or other billionaires who are reshaping Miami and Palm Beach, she set up shop in a decidedly less glamorous city. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. We made it to the end of the week. I'm Alex Steele here with Jen Ryan. Paul Sweeney is off today. He will be back, so he says, on Monday. Let's get you updated here on world and national news with Michael Barr. Michael?
Thank you very much, Alex. Jen, John, the judge in the Georgia election interference case against Donald Trump and others says Fulton County District Attorney Fani Willis must step aside or remove the special prosecutor with whom she had a romantic relationship before the case can proceed. Willis and Special Prosecutor Nathan Wade testified at a hearing last month that they had a romantic relationship but rejected the idea Willis improperly benefited from it, as lawyers for Trump and some of his co-defendants allege. Fulton County Superior Court Judge Scott McAfee says he found the allegations and evidence legally insufficient to support a finding of an actual conflict of interest, but the judge says there is an appearance of impropriety. We got reaction from former Watergate Special Prosecutor Nick Ackerman.
By getting rid of Wade, clearing him out of the way, it sort of clears out the issue. It takes care of it. People will not be focused on him any longer, and the case will move forward just as it had done before.
Former Watergate prosecutor Nick Ackerman was a guest on Bloomberg Surveillance. Deadly tornadoes swept across the nation's heartland overnight. Now, with daylight, the damage is becoming clear to stunned communities. The reported tornadoes killed at least 3 people in Ohio. During a news conference this morning, Logan County Sheriff Randall Dobbs said the death toll could rise as search efforts continue.
The devastation was such that we have to get heavy equipment into these areas to be able to move this material where homes have collapsed to see if there's anybody injured.
Severe weather, including suspected tornadoes, also caused widespread damage across parts of Arkansas, Missouri, and Indiana. In golf at the Players' Championship, through 12, Matt Fitzpatrick leads during round 2 at 10 under. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Jen, John.
All right, Michael Barr, thank you so very much. So here is an article that caught our eye, and not necessarily surprising, but apparently middle manager layoffs are surging as U.S. firms question some value. Apparently, among white-collar workers, middle manager job cuts rise to more than 30% of laid-off employees as we're looking for efficiency, et cetera. And it says if you got direct reports, look behind your shoulder.
Yeah, it's a dangerous part of the corporate structure to be in. Yeah,
Didn't we know this, though? Like, didn't we know that middle management was overdone?
Yes and no. I mean, we have all seen The Office.
Yes,
but
of course.
The point that this story is making, and this is from the Work Shift team at Bloomberg News, and they are fantastic. They do a lot of very interesting things. The big jump in the share of layoffs that go to middle managers is really quite compelling. So in 2018, it was 20%. And just compare how that goes with staff. In 2018, 75% of layoffs went to staff versus half now. So like the curve has inverted, as if you can appreciate the point.
I do. Also what's interesting is if you take a look at executive layoffs too, you're looking at almost 15% for executives now versus just 6.3% in 2018. So it's not just middle managers. It seems to be taking it out of staff and putting it into middle managers and the executives.
Yeah, and then if you talk to like the tech industry, Elon Musk, Mark Zuckerberg, they sound like it's all win, a very slim organization. This is the way forward, going to be more efficient. But this story points out there's a lot of downside there. So when Facebook started making its cuts, what turned out happening was that people didn't know what their workflows are, and then there became all these hiccups. So it's kind of like you sort of have to pick your spots. And so
the idea is like if you get rid of too many middle managers, then like they actually do stuff. Like they do things. So if you get rid of too many, that they're big holes.
Yeah, I know. So they get asked, what is it that you do? And they can say, I do things. I make things flow along. And it's true in some cases. Maybe not in all, but...
Yeah, and also a large part, I feel like, I'm not a manager. I don't manage people. I know you have, right? You manage teams, no? No. I thought you had. Okay, I stand corrected.
I'm content.
You've content, okay. But like a lot of managing that is just like talking to people and like talking about their feelings and their worth. Like
I do that anyway.
How do you put it right? How do you put a number on that kind of psychology. Jen, I really appreciate your time today and the whole week. Thank you so much for joining me.
Pleasure to be here. Thank you so much.
We will get you next time when Paul's out. In the meantime, Balance of Power is up next. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Donald Trump may face no trials before the election. Welcome to the fastest show in politics as a new document dump promises to postpone the hush money trial that was just about to begin in New York. We're going to talk about this and some other important developments in Donald Trump's legal journey with Palm Beach County State Attorney Dave Ehrenberg. It's 1 week to a possible government shutdown. Israel approves an assault plan for Rafah. And the campaign rides the Rust Belt. We'll have the latest on all these stories with analysis from our signature panel. Back together on this Friday, Jeannie Shanzano and Rick Davis with a lot more ahead after we check Wall Street. Let's get you up to date on trading right now. In New York, here's Charlie Pellet.
Thank you very much, Joe Matthew. Indeed, red on the screen right now. We have got the Dow, the S&P, NASDAQ, all declining. S&P right now down 34, drop there of 0.7%. Big tech, the sell-off there, the big story today. NASDAQ 100 index down 1.1%. The NASDAQ Composite Index down 1%, tumbling 155 points. We've got the Dow Jones Industrial Average down 150, a decline there of 0.4%. The 10-year yield 4.30% with a 2-year 4.71%. Gold down $2 the ounce, little change, down 0.1% right now. An ounce of the precious metal at $21.59. Crude oil is down 0.3%, 81 even a barrel, while Bitcoin is down 3.5%, 68,220 on Bitcoin. We are in a presidential election year, and so far this very young election year, we've got the S&P 500 index up by 8%. But what to expect for the rest of the year? Sam Stovall is Chief Investment Strategist at CFRA.
Historically, election years have always been positive when they have been front-ended by a January gain in the S&P 500 going back to World War II. And I think that because we have seen so many all-time highs, that too sort of indicates that maybe we are getting ahead of ourselves.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. I mentioned the sell-off in big tech. Case in point, Adobe. That stock plunging now after earnings down 14%. Adobe declined after a weak sales outlook for the current quarter fueled concerns that new AI startups are a competitive threat. Again, Adobe right now down by 14%. Recapping, stocks lower. S&P is down 32, a drop there of 0.6%. Balance of Power continues. Back we go to Washington. Once again, your host, here is Joe Matthew.
Charlie Pellet, thank you. Happy Friday. Welcome to the threshold of the weekend, the Friday edition of Balance of Power. Live from Washington, where the Taoiseach is in town. Everyone's feeling good. The flowers are budding. We have spring in the air. As I told you yesterday, it's like the mid-70s here in the Capitol. We're talking cherry blossoms and dining outside. But as Joe Biden meets today with the Taoiseach, you got that? Everyone got the pronouncer? That's the Irish Prime Minister, makes the annual visit here to the U.S., and as Joe Biden meets with him in the Friends of Ireland luncheon that starts about a half an hour from now at the Capitol, Israel will be in the air. The Taoiseach has been getting an earful in Ireland. 4,000 messages from constituents upset about the U.S. policy towards Israel and Gaza, in many cases urging him to not make the visit this time. And this all comes after an important speech from the floor of the Senate yesterday from Chuck Schumer, of course, the Democratic majority leader in the Senate. Let's listen to what he said.
Prime Minister Netanyahu has lost his way by allowing his political survival to take the precedence over the best interests of Israel. At this critical juncture, I believe a new election is the only way to allow for a healthy and open decision-making process about the future of Israel.
a new election. And I can assure you that his counterpart in the Senate does not agree. We heard yesterday as well from Mitch McConnell, of course, the Republican leader who sees this very differently. And, Mitch McConnell has been on the same side of funding for Israel, Ukraine, and Taiwan as Chuck Schumer. But we're finding a bit of a fissure here. If we can hear from Mitch McConnell, listen to what he said.
It is grotesque and hypocritical for Americans who hyperventilate about foreign interference in our own democracy to call for the removal of a democratically elected leader of Israel. This is unprecedented. We should not treat fellow democracies this way at all.
As we read the headline on the terminal, Israel prepares Rafah assault while reviving ceasefire talks. An important series of developments today that we talk about with Nick Wadhams, who heads our national security coverage here in Washington. It's great to see you, Nick. Important to see this plan come to some fruition because the White House has been very deliberate about no invasion unless there's a way to protect civilians. What do we know about it?
Well, at the moment, not a whole lot. Secretary of State Tony Blinken is in Vienna, and our own Ian Marlowe actually asked him about this issue, and he said no, he has not seen any plan to evacuate civilians from Rafah. So a little unclear what's happening here. Israel saying it's determined to go ahead and it will evacuate civilians, but the pressure from the U.S. is really to do this not in an ad hoc way, not to sort of wing it when you're talking about hundreds of thousands of people, but a very deliberate and clear plan that gets people out of harm's way, but also provides the necessary support so they can find a place and get enough food and water and shelter to be able to survive. And we're not seeing that so far, according to the Secretary of State.
Just because we're seeing this come from the War Cabinet does not mean it's imminent, as you're reporting. What's the approval process? What would happen next?
Well, I mean, it's very difficult to tell on the inside of the Netanyahu government, but what we know is he is under so much pressure, obviously, from his right flank. This is really the heart of his coalition. So any concession that he makes towards civilians in Rafah in some ways will almost not necessarily be opposed by his coalition, but there's not going to be a lot of patience if he says, okay, we're ready to do this, and then the U.S. and others are saying, wait a minute, slow down, because they really see this as their window of opportunity to go after Hamas in Rafah. But really, there are very few people who actually have Netanyahu's ear who can slow him down and make sure that plan meets the specifications that the U.S. wants.
Can you help me frame the significance of what we heard there from Chuck Schumer, the highest-ranking Jewish American elected official, making a call like that, having supported the policy largely until now? Granted, there have been concerns by Democrats on the Hill, but the Taoiseach's talking to Joe Biden about this. You've got Chuck Schumer talking about it from the floor. It's just a very different tenor than we had a couple of weeks ago.
I mean, it's extraordinary. I haven't really seen a lot like it. I mean, but what it does show is that President Biden is under extraordinary pressure now, and in some ways, this situation with Israel really has gotten to a place that the U.S. realizes it cannot control, and they're really struggling to figure out how to deal with that. Normally, in the past, you would have seen a situation where a U.S. president would have said, called a Netanyahu, wherever it might have been, and said, cut it out. This has gone too far. We have civilians dying of hunger in the Gaza Strip. We understand your need to go after Hamas, but you are not doing enough to protect civilians. There is no indication, if the president is making those calls, that Netanyahu is listening. And that's why you've seen the U.S. essentially say, okay, we're going to go around Israel, airdrops of aid, food via ship. So essentially, it's almost like the U.S. and Israel, allies ostensibly, are acting at cross purposes here. So you're starting to really see that bubble up. Should note that the administration said that while Chuck Schumer did give them warning about his speech, they didn't approve it or have any say in it.
They're not speaking for the White House in this case.
Correct.
Nick, it's great to see you. Thank you. Nick Wadhams,
My pleasure.
of course, back with us. You're familiar with the voice and the face at this point. He runs one of the best national security teams in the business, and always rely on Nick's reporting here as we turn our attention to the campaign trail, if I can call it that, by way of Donald Trump's legal issues. Imagine a world, and maybe Dave Ehrenberg has already envisioned this, in which there are no trials before the election. Forget Alvin Bragg. Forget Jack Smith. Forget Fani Willis. Dave Ehrenberg is, of course, Palm Beach State Attorney and has been a voice of reliable analysis and insight here on Bloomberg through the course of this time. And Dave, we see today now that even Alvin Bragg thinks this New York trial, set to begin March 25th, should be delayed because of a massive document dump that happened in the middle of this week. And it's the SDNY's fault, isn't it?
Oh, yeah, and you're talking to a state prosecutor, and you want me to blame the feds? I will, because that's what we do. So I'm going to take the side of the district attorney here, but also it's Trump's own fault too, because his lawyers subpoenaed these documents from the feds in mid-January. So yeah, the feds aren't going to turn around overnight and be able to provide 100,000 pages. And so here we are. This reminds me of the situation where you have a child who kills his parents and then asks for mercy from the court because he's an orphan. Well, Trump created this situation, so now he wants the case thrown out or a 90-day delay in the case because of the late discovery. Well, you waited until mid-January to request this. Now, this does not take away the blame from the federal prosecutors in not being more proactive with the local prosecutors in responding to the local DA's request for these documents. So I give part of the blame to the feds. I give part of the blame to the defense. This is what they wanted, a big delay. I don't blame the DA's office for this, but it looks like there will be at least a 30-day delay. And one thing differently, though, Joe, I do think there will be a trial before the election. I think this still goes to trial before the election, but it will be delayed.
Okay, so how will that work? And is it this case? You get, as you mentioned, Alvin Bragg conceding to a 30-day delay. Once we get things back on the calendar, is it as simple as only waiting for that long? What if they start finding stuff in these 30,000 pages?
Oh, you had to complicate things with that, huh, Joe? Yes, that's the problem.
Well,
if you do find, if you find new stuff, that's a problem, and it could be delayed further. But I think a lot of this stuff is just extraneous. I don't think it necessarily will cause any more delays, but perhaps I'm being optimistic as someone who has seen this delay strategy work seemingly everywhere else. But I thought in New York, in a case that's not controlled by the Supreme Court's calendar, that this would go. I still think it goes. I think you'll see a 30-day delay. It is possible, as you correctly say, that it could be extended based on what they find, but there's still enough time to have this case go to trial before the election. This is the case that's most likely to go before the election. And the only other Trump criminal case that I think has a chance of going before the election is the federal case in Washington, D.C. over election interference, the one currently held up by the U.S. Supreme Court.
I'm going to ask you about that in one moment. Remember this conversation and what Dave Ehrenberg said if this thing actually kicks off before the election in New York. Alvin Bragg says these new documents, thousands of them, include materials he requested more than a year ago that the SDNY previously declined to provide, and that some of the documents, he says about 172 pages of witness statements, Dave, are relevant to the case. How should we interpret that?
Yeah, of the 100,000 documents, maybe 172 pages are relevant, but it doesn't mean you have to have an additional delay. But if there's something like an important witness that needs to be tracked down and interviewed, that could be an issue, but it doesn't mean it's going to be delayed 6 months. You've got a judge here, and Judge Merchan, who wants this case to go. And because of that, I think it is going to go. Now, contrast that with Judge Cannon in my neck of the woods, the federal judge down here. She has been slow walking the case, giving all the delays that Trump has pretty much requested. And that case is not going before the election. A lot of it is with the judge. They have a lot of discretion over their calendar. And that's why Judge Chutkan, the federal judge in Washington, D.C., was going to get this thing started until the Supreme Court put the kibosh on it for now.
So with regard quickly to that Jack Smith case, we're waiting on the Supreme Court here. Dave, arguments are set for April 25th, about as late as they could schedule them in this term, which would mean, what, a ruling maybe by the end of June? When would you see a trial starting under that scenario?
Well, it is possible that with a ruling in June, as long as the Supreme Court does not remand the case for further findings by the district court, where they say, here's a new rule we're going to set up for all future claims of absolute presidential immunity. You've got to look at these considerations. And then that forces the district court then to have a a hearing where they look at all these considerations, and that would essentially kill the case before the election. So absent that, if they just deny the motion, if they just send it back to the district court and allow the case to continue, then it is possible that it happens before the election. That Judge Chutkan wanted 88 more days of preparation for Trump, but I think because of all these new delays that she will cut that down. And then I think Jack Smith will also cut down his estimated time to try the case. So it is conceivable that you could have this case being tried within 2 months of the election. Now, for those who think there's a DOJ rule in place that says you cannot try a case 60 days before the election, that doesn't apply to a trial where someone has already been indicted. It only applies to initiating new investigations or doing things before a grand jury or doing some investigative steps that could interfere with an election. But the DOJ has already said that there is nothing that bars them from trying this case close to the election.
Spending time with Dave Ehrenberg, Palm Beach County State Attorney. I haven't even mentioned Fani Willis yet. Dave, this is the story most people will be hearing about, even as you and I look forward to some very important developments here. A judge ruled today, Fulton County DA Fani Willis can continue overseeing her case against Donald Trump as long as Nathan Wade, this is the prosecutor with whom she was dating, had a romantic relationship, steps down. Is it the right call?
Yes, I mean, I like the result. I thought that it didn't have to come to this. If they would have just come clean earlier on about the relationship and recused Nathan Wade because of an appearance of impropriety, you wouldn't have had to go through all this. So I think eventually he reached the right outcome. The only part that I'm a little confused about is how he got there. Essentially, he said the standard is whether there's an actual conflict of interest, correct? And there is no actual conflict of interest. It's not like she has a relationship with the judge or the defense lawyer or a witness. This is a fellow prosecutor. So that burden is not reached. But he also said that he doesn't believe Nathan Wade. He doesn't have credibility. And it's hard to say that he doesn't believe Nathan Wade, but he believes Fani Willis. They're sort of on the same team here. And so he found a way to do some legal jujitsu by saying, well, because of an appearance of impropriety, you got to drop either Nathan Wade or yourself. So it's going to be by Felicia to Nathan Wade. But legally, I just thought it's a little bit of a stretch to say we just don't believe Nathan Wade. But at the same time, we're not going to make a determination on the credibility of Fani Willis. And even if Nathan Wade lied, we're not going to bounce both of them from the case, just one of them from the case. Remember, Fani Willis adopted Nathan Wade's affidavit. And so I got to believe if you think one of them lied, then you have to say both of them lied. But in this case, the judge is saying this is all about an actual conflict of interest. Since that does not exist, it's game on.
Unbelievable. Dave, great to have you. Thank you for walking us through this, as always. Dave Ehrenberg with us, the Palm Beach County State Attorney, with us live from Florida. Hope it was a good cruise. We'll talk to Josh Wingrove next, our White House correspondent, coming in with a fascinating story that brings us to the blue wall and the Rust Belts for Joe Biden. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all moving lower right now. A lot of red on the screen on this Friday. Tech selling off. We begin with NASDAQ down 171, drop there of 1.1%. NASDAQ 100 index down 1.2%. To put it all in context, we have got the S&P down 36, a drop there of 0.7%, while the Dow is down 175 points for the Dow Jones Industrial Average, or drop right now of 0.45%. 10-year yield 4.29% with a 2-year 4.71%. Spot gold little changed, higher by 81 cents the ounce to 2,163. A gain right now of just less than 0.1%. A retreat for crude down 0.3%, 80.98 a barrel on WTI, and Bitcoin now lower by 4.1%. Bitcoin is at 67,772 on Bitcoin. The National Association of Realtors has agreed to settle litigation over commission rules for American real estate agents, clearing the way for widespread changes in how Americans buy and sell homes. Among publicly traded real estate-related companies, Zillow down now by 12%. We've got Redfin trading lower by 5.8%. Again, recapping, stocks lower, S&P now tumbling 37, a drop there of 0.7%, just about the low of the day. Balance of power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we thank you. Welcome to the Friday edition of Balance of Power. Happy St. Patrick's Day, or should I say, beware the Ides of March. Thanks a lot. Producer Matt lets us know. I should have been more concerned when I woke up this morning. Maybe Joe Biden should have been as well, or maybe he already knew to be as he heads into his meeting with the Taoiseach ahead of St. Patrick's Day. It's all things Irish in the nation's capital today. And the big Friends of Ireland luncheon happening on the Hill. We're told the Taoiseach has been getting an earful about U.S. policy in Israel and Gaza. We talked about that a bit earlier with Nick Wadhams. And it's a conversation that they likely had in their bilateral meeting earlier today. We're going to be focusing on Joe Biden's campaign strategy and whether the blue wall is still intact right now with our friend Josh Wingrove, Bloomberg's White House correspondent. Josh, but I've got to ask you about the stakes here as Joe Biden goes to the other end of Pennsylvania Avenue for what's supposed to be a really lighthearted, sort of fun event, right? They're riffing jokes and telling stories about Ireland. Everybody's wearing green, but there's a real issue that is hanging over this meeting.
Yeah, absolutely. And part of that issue is what Congress will do about it. So it's colliding a little more than it even would have in the meeting between the two leaders in the Oval Office a short time ago. We'll see where they go with it. There's some controversy in Ireland leading up to this trip around calls for the Taoiseach to press the U.S. to do more.
And boycott the trip?
That's right. That's right.
That wouldn't happen, though. Right?
Well, I think it would certainly be a big statement if it had.
Sure would.
This lunch, though, is a lighter affair. You mentioned it, but let's just emphasize that.
Sure.
I remember one earlier in his term with Kevin McCarthy. At the time, things were boiling over left, right, and center, but it really was relaxed in the lunch. So I would expect to see more of that here, but we'll see. Biden has been slowly cranking up the pressure. Some news today with him saying he agrees with his Irish counterpart on the need for an immediate ceasefire if they can get one. Of course, the U.S. position is that is on the table right now if Hamas agrees to release a certain category of hostages, the elderly, the ill and injured, and women. As the Americans tell it, Hamas has not agreed to do that. So Biden is trying to crank the pressure up. He endorsed Senator Schumer's speech, which will put a little more pressure on Bibi as well. But
it's kind of a big deal, isn't it?
It is a big deal.
Election.
Yeah, we can read more about it on the terminal, Joe.
You sure can.
Yeah, it's a good one. The pressure is building, though, for sure.
Well, I'm reading about the blue wall on the terminal, and a great story that you put together here. It's kind of like a Rust Belt weekend that we're walking into. Donald Trump is in Ohio tomorrow. We've got an Ohio primary next week, but it's Pennsylvania, Michigan, and Wisconsin that you're zeroing in. If we sort of tighten the noose here a little bit more, these are the 3 states then, not necessarily the 7 in our Bloomberg swing state poll that this Biden campaign has to win.
Yeah, almost.
Yeah?
Do we think it
What's
is
the caveat?
There are scenarios where they drop one but can maybe win Georgia or Arizona or what have you.
Okay.
But I think it's important to focus on these states because he doesn't need the bottom 4 if things go his way in the top.
And that includes Nevada. He doesn't need necessarily, even though Trump has never won Nevada, but he's doing pretty well there right now. Latino weakness is an issue for Joe Biden. So the concern, if you're Biden right now, is these polls don't turn around. Arizona doesn't look so great. Georgia doesn't look so great. North Carolina was always a bit of a reach, although the governor candidate there for the Republicans is giving Democrats hope that would help them because he's pretty polarizing. And reliable Nevada is sort of sliding out of the way. But the blue wall states signal how Biden can win a narrow election if it comes down to that. He can get to 270 with them and others, but without those bottom four. And these are traditional Democratic states. So we mention it by way of saying that this path exists for him. He doesn't actually have to win the same states he won last time. He had more than enough last time. And in these states, there's a lot of things in common. They all have Democratic governors. They all have Senate races. In two of them, there are pretty popular or popular-ish incumbents running that may or may not have sort of synergies, coattail effects, whatever you want to call it. And Biden talks a lot about unions and manufacturing and abortion rights, and those are issues that all play pretty well for Democrats in these three states. So that's why the Biden campaign officials I talked to are optimistic a little bit about the chances for a rebound in these three. Although if they were sitting here next to me, they would also smack me on the head and insist that all 7 states are equal, Joe. There are no tiers here, but Josh Wingrove's tier is that I think we should be spending a little.
The Wingrove tier.
We should be
Forget
paying
the
a little
blue wall.
attention to those three.
I love that.
More so than the other ones.
It's now branded. It's not a mistake that Sean Fain was at the State of the Union.
That's right.
Does he need to win the union vote, which he did not last time around, to win Michigan or even Pennsylvania?
Yeah, he needs union members to win those states, for sure. And the issue for Biden and for Clinton before him was that the union leadership's endorsement doesn't always carry the same block of votes that it used to. The members
They
vote
like
their
Trump.
minds. Right, yeah. Trump has some appeal with a lot of these folks. Biden has been almost singularly focused on winning union support. We saw that this week with his statement about the United Steelworkers and their attempt to sort of derail or change the terms of Nippon Steel's takeover of U.S. Steel. Biden, of course, coming out against the deal or saying at least he opposes it as of now. So Biden is wooing these groups. Fain is a big part of that. A lot of the critics of the 2016 campaign where Clinton lost these 3 states, which were thought to be Democratic blue wall strongholds, was that she didn't go to Union Hall. She didn't go to these states either at all or enough. Biden seems sort of determined to make sure that isn't the case. And so if you were looking for the makings of a Biden rebound, I think it's most likely it starts or runs through these 3 states that tilt blue as opposed to Arizona and Georgia, which tilt a little more red, but they're all sort of purple states. I should note that Bloomberg's poll, the most recent one coming out last month with Morning Consult, has Biden losing in all these 3 states right now. All of them right now. Although Michigan is the closest.
There's no path around that.
There's no path around that. They need a rebound for sure, unless they're banking on a major polling error. But we'll see, what the further polls show.
What do you make of the fact that this president enjoys no bounce from what everyone roundly considered a successful State of the Union address?
Yeah. I think it's going to be disappointing for them. I think also they think people aren't tuned in. They're trying to figure out how to navigate, particularly with an 81-year-old principal who's not exactly, jazzing it up in a TikTok video every hour. How to
They are on TikTok.
They are on TikTok as they try to force the divestiture.
Right.
They're trying to figure out how to reach people. And so yesterday he was in Michigan doing sort of a family setting at a golf course kind of thing. Those will produce social media videos. That's what they want more so than sit downs necessarily with people like you and I to try to meet people where they are. The plot continues to be for Biden that they believe people when they tune in, normies, as I might call them, who are maybe not super attuned to the political cycle right now, when they tune in and are reminded about what Donald Trump is saying, that they think that that will benefit Biden and that his sort of broad, looser coalition will come together. Trump's approval ratings now in polls are higher than they were when he was in office. So some people have either changed their mind or are forgetting what they thought about him 4 years ago. So that is what Biden is banking on right now.
I think we can say with a bit of confidence, you see in Joe Biden, you spend more time around Joe Biden than most people in the world by way of your job. You see him in a lot of different scenarios that most people don't, coming in and out of the portico, climbing up into the helicopter, walking around the colonnade, dealing with stressful, loud situations when the chopper's running and all that. Maybe you're not allowed to answer this, but do you still see the same guy you saw when he started this term?
we're making an ad here, you know,
Are
one
we?
way or the other. I don't know.
Okay, let's be careful. I'm not trying to do that.
I'm joking. Look, Biden is ramping up his campaign schedule now. He obviously, every president ages in office. That is true of
course,
him. Yeah. His doctor's report, which is pretty thorough, indicates some stuff like a limp. And that's what we see with him. Voters are responding to this. You know, we're seeing this in our poll. We're seeing this in other polls, that people think he's too old to be running, including people that say they're going to vote for him anyway. So it's a tough one to put together and see where what's going to come out in the wash. So, you know, we'll see where it goes on it. Some of the question among Democrats has been, can Joe Biden perform the sort of center stage spotlight part of a presidential campaign more so than Democrats doubting that he's doing a good job at being the president?
Right.
Like, can he put on his tap dance shoes and really put on a show for everyone?
Yes, right.
And for now, the State of the Union has quelled that. You saw a big sigh of relief from Democrats who otherwise really had their jaws clenched at the start of that speech. But whether that'll continue to be the case, we just don't know.
How about that? That was one of the most diplomatic, amazing. Just watching you assemble that answer as you delivered it so eloquently. We don't want to create an issue here for anybody or make an ad. I like where you're going there, but I will say, though, I don't know what they do to Joe Biden, but there are times when he either gets the rest or eats the right stuff where he's in full voice like he was the other night at the State of the Union that reminds us of the way he sounded on the campaign.
Yeah, I mean, the commentary that evening on Fox News and others was, what did they give Joe Biden?
Yes, right.
And I have no, that's a great scoop out there. That's true. I don't know. I have not gotten that scoop.
I think what I said, I'll have what he's having.
Right, but if he shows up and delivers that kind of a performance, you're going to see Democrats a lot more calm than if he shows up and gives more of a different performance. I will also note that he has a stutter, and he's starting to talk about this a little bit more.
He seems to have
stutters are fatigued.
embraced that.
Well, yeah, he used to kind of deny it. In fact, he didn't even want to talk about it last campaign. That goes to show you how quickly things change. They're talking about it more now, which is, I guess, their way of addressing some of these age concerns and speech concerns. But he has a stutter. Stutters typically represent themselves as people age or get fatigued.
Yeah, right.
He's an 81-year-old in a pretty tiring job, so that could be a factor here in some of his speech performance as well.
Josh Wingrove, great to see you. Thank you for coming in. Canada's Clark Kent, as I like to call him. This is, by the way, is the only time we will ever appear to be the same height if you're watching us on YouTube right now. Yeah, that's quite a we're way late for Amy Morris. Amy, I'm sorry. Let's get world and national news. In the 99.1 newsroom in Washington. I'll get there, Amy. What do we have?
It's all right, Joe. The DA can stay, by the way, but her boyfriend has to go. That's the ruling from Fulton County, Georgia Judge Scott McAfee in the election interference case against former President Trump. The judge says District Attorney Fani Willis's relationship with lead prosecutor Nathan Wade was improper, but the appearance of a conflict of interest can be resolved if Wade steps aside. And former Watergate prosecutor Nick Ackerman tells us that there was no way that they were going to be able to make a case out of this. They simply didn't have enough evidence. Now, the PGA Tour's Players Championship is underway in Florida at last check on day 2. Let me look it up. Wyndham Clark sits atop the leaderboard at this hour. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.